All right, everybody, welcome back to another live stream. Hope you're doing well. Hope you're staying safe out there in this spooky week. It's actually Halloween, so happy Halloween, everybody. I didn't have a costume this year. I feel like so lame for that. I feel like I should have had a costume on today. Anyways, I hope you're doing well. Hope you're having a good trading week so far. Been a bit of a hectic one. We had some interesting stuff we got to go through. We have PCE numbers in just a short 10 minutes. We also had some earnings reports from key stocks in the US stock market, which are going to be really important to the state of this rally. You've had this ginormous run up in stocks in the last few years, up 40% or so from the lows. NASDAQ's probably up, even more. Look at that, 100% gain from the lows of 2022. SPX, let's just take a look at that for context as well. 67%. I mean, these are ginormous moves going back the last few years. So when we look at this rally, we say, what's going to get this thing to continue? What's going to keep this thing cooking, if you will? The answer is good earnings and an economy that is still hospitable, and to top it off, inflation / interest rates that are, not crushing to people. Inflation in 2022 really spooked the market, gave us a huge sell-off, but we then started to see, companies hold up despite the very difficult inflationary times. Consumers still, struggling to this day, but things are getting at least arguably better than they were. At one point, inflation was at like 9-something% in the USA. And, that's critical levels of inflation. We're now back down to a much more reasonable level of inflation. You can feel it, right? You go to the store, prices are still going up. They're not designed to go down. If they go down, you have a problem, right? Because the Fed prints money, and if the prices are still going down despite the Fed always printing money, then you have like consumer that's just been completely destroyed. That because they're not spending any money and causing prices to go up, right? People out there spending helps to increase prices, but if people are not spending whatsoever, that's really bad for the economy. People lose their jobs, etc. So, anyways, inflation has dialed back. It's still going up. Prices are still going up, but they're not going up nearly as fast as they were, and that's the positive, I suppose. One of the things that's contributing to that story and helping in a positive way has been the recent drop in oil prices. If we take a look at the weekly chart for oil prices, you can see what 2022 was. 2022 was a really tough time because you had a skyrocketing oil price, which makes things, challenging on the prices front, because if inflation, if prices go up because of some of the inputs, right? I always say this on my show because it's really important. Oil prices are an input to every product and service, even in existence to some degree or another. Because think about it. I always use the reference of a cereal box. A cereal box, you pour your cereal. How did that get to the store for you to purchase and consume, right? How did that happen? Well, somebody put it, first of all, there was manufacturing, there was, ginormous plants and farming and, all these things. But one thing that is for sure is it had to physically get to the store. How did it get to the store? They put it on a train, they put it on a plane, they put it on a ship, right? All of those things use fuel, and the underlying oil, right, is an input cost to everything. So when oil prices go up, everything else kind of follows. When oil prices go down, prices don't necessarily plummet per se, but they may cool off from going up as fast. So with oil prices sort of stagnant / down in the last few years, right? That has been a helpful thing to the global inflation story, not just the US inflation story, but the UK, Europe, like all these places that experienced tough inflation. Oil prices being lower makes, everything else kind of chill out a little bit. Happy Halloween to yourself and to everyone. Let's get to the bag on this Halloween day. Yep, we can do some trick-or-treating, talking about some ideas, talking about trade setups. We've got countdown to core PCE numbers. This is an inflation read. Speaking of all this inflation, we also have the employment cost index, which is a really useful thing to see kind of like wage growth. This is sort of an inflation / employment indicator. PCE, of course, an inflation gauge that the Fed really likes to look at. So that's important. And you have unemployment claims. Today could be really red. It could be really green. We're going to have to see what this data point prints, because if this comes out, I'll tell you what I'm most interested in seeing. Again, 4.5 minutes to go. Just popped up on our screen here. Until we get this information, well, what I'd be looking for, most important things to me, really all three of these things. But right now, jobs data is really the interesting one to the max. Because if you get good jobs data, meaning claims are low, that's going to be a really important tell of the state of the economy. I am personally in the camp of I can stomach a little bit of stagnation in where the inflation levels go. Like, we're pretty low. Like, I don't need to see. I mean, it would be nice if inflation kind of continued to settle around 2%. If we could get closer to 2%, that's great. But I think more important is just not to see the jobs data slide. So unemployment claims are going to be really important to me. That being said, inflation could take center stage today if it is the bigger surprise. Remember that when we are understanding economic data, we don't do the newbie thing of just saying, oh, I just watch out for red news. Come on. Take a second to understand what these things are actually telling us. It's really important. Unemployment claims are how many people are out there filing unemployment, right? If people are filing unemployment like crazy, that would tell you that the US labor market and underlying economy in that sense may be hurting a little bit. If the jobs data comes in better, then consumers are maybe in an okay spot. They're going to continue to go out and spend money, borrow loans, businesses can do well, dollar can be strong, right? That's really important. Inflation is also important, but again, I think that you just want to see inflation not be too threatening. Great if it goes down, fine if it is at where it currently is, doesn't change, etc. So that's kind of my bias going into this. If I take a look at some charts that I'm most interested in, if the S&P and NASDAQ have bigger pullbacks, then absolutely great. I can get some pullback entries. If you do see, perhaps inflation ticks up more than expected or jobs data is worse than expected, those would be catalysts, in my opinion, that we could see some larger downside moves on the stock market, the S&P 500, the NASDAQ, right? These things which have seen a little bit of a pullback in the last 2 days or so. We'll see if that continues today or if we kind of reverse course. Here's the Dow Jones. Dow Jones is getting into an interesting level right now as we speak, actually. Got the 38.2% retracement coming back into play in the context of a very strong upward trend. I like the Dow, but the difficulty is how much does the Dow get loved on the EdgeFinder? Not enough. So no trade for me, and I'm glad that is the case, because I have avoided trading the Dow, and that has been a winning decision simply because it's in neutral territory. I have preferred the ones that are stronger on the list, like NASDAQ, Nikkei, SPX. Those ones are getting higher readings for the index side of things, and that has probably saved me some money because, again, I wasn't chasing into the Dow too early. I'm going to wait for the Dow Jones to get a little stronger reading than a +3. A +3 to me is just a little too light. I want to see 5 or above to get a bullish rating on the EdgeFinder scoring system, which for new traders on the EdgeFinder front, sentiment, technical, and economic data are all being automatically imported by our system, and an algorithm determines whether each one of these variables are bullish or bearish for the underlying chart. So for currency traders, we've got dollar yen as a bullish reading. That's looking at the commitment of traders data to track institutional money flow. It's looking at what retail traders are currently doing. Are they piled in long or piled in short? And if you get a 0, that means they're probably somewhere in the middle. If you take a look at seasonal trends for dollar yen, is it seasonally a positive month or a negative month on a 10-year average basis? Well, it's a positive month. We got a slight uptrend for the dollar yen on the daily chart. And we can see GDP, some of these stats are getting, kind of flat ratings, but then inflation is much more convincing for the dollar, right, side of things, in the yen. Employment data looking strong out of the US. And this is how we're getting this +6 score, which gives me personally, I then take this and I look for technical setups in favor of a bullish setup. I hope that makes sense. That's how the EdgeFinder works. And I don't have the, my editor is, I'm hoping he's okay. I haven't heard from him this morning, but he's usually behind the scenes. We just had numbers come out. Sorry, guys, I missed it. I'm all over the place here today. Let's see what we had in terms of data points coming out. We'll see how this impacts the charts, and then I'll come right back to things. Let's do this. We're going to go switch to our all markets, see how things are reacting. Again, we got PCE numbers, employment cost index, unemployment claims, all of these really important data points. From the times that I've seen recently, the ECI, or employment cost index, has been all over the place with accuracy. So let's see how it came out. All right, we got better than expected unemployment claims. Love to see that. That's a positive right there. I like that. Employment cost index being lower than expected is sort of good for the inflation story. Let's take a look at core PCE numbers, which came in as expected. And let's see how this is impacting charts. We've got S&P not moving too much, US 30 not moving too much, Russell slightly higher, NAS slightly higher, gold slightly lower here off of, again, the good jobs data print. That would make sense. Dollar index just modestly higher, not too much there. And oil prices actually making a bit of an advance off of that. Not huge spikes, but still watching to see if there's any sort of delayed move. Unemployment claims were better than expected. 216K is pretty good. We will take that. 216K. 0.8 for employment cost index, lower than expected. 0.3 for PCE. Okay. So let's take that and let's go look at some ideas. Where does this leave me? Well, jobs data looks good enough. In my opinion, we are at good enough levels for jobs data. I don't, when it comes to this week, we've had some mixed responses. For example, let's go through what we've had this week. JOLTS, we've had ADP. We now have claims out and available. And then we have NFP tomorrow. So we don't know. This is our unknown, right? Let's break this down here. Our unknown is NFP tomorrow, which is a really big one. On NFP, unemployment rate / NFP comes out tomorrow. Claims today were good news. ADP was good news. JOLTS numbers, not super impressive. So we're 2 for 3 right now with good jobs data. That would lean me more towards positive on the dollar, positive on stocks. Now, I actually like this a lot for stocks because we have good jobs data, but we don't have impeccable jobs data. What's the problem with impeccable jobs data? Impeccable jobs data would mean an explosion on the 10-year treasury, 10-year yield. We want this, guys. This is, I've made this point many times. So let me make it once more, because it is that important. It is so important that we get on the same page with this. Chris Pulver, who, if you're a regular stream viewer, if you're new, by the way, if you're new to the stream, can you comment in the chat? Just say, hey, I'm new. I just want to try and see if I can shout out your name and thank you for joining us. It's good to have new people here. We're always trying to bring new people into the show. So on this show right now, I'm hosting, but we have a rotation of hosts that take over. So for example, Chris Pulver is our other kind of head trader on the show. He comes on almost every day and does a session talking all about, he's very heavy on the stocks, options, and indices side of things. So I want to get to his thought in just a second. Let me just say hello to some of you guys. David, what's up? Ongo, Brass, Raymond, Blank, Laban, Johan. If I say your name incorrectly, MK, Basha, I'm old. Basha, you are old. If I say your name incorrectly, I apologize. Shout out to everybody who's new here. I want to say something to the new people today. That's really important. This guy's new. To the new people, right, who don't understand the bond market, there's some weird thing about the bond market. And the weird thing is nobody talks about it except the smart people, right? And I'm learning actively. I don't consider myself the smart people just yet. What I'm talking about is the people who are like the brilliant people who have billions of dollars under management and have figured out something, right? Well, when I listen to them talk, I listen to CNBC, which, has some great characters on it, has some perma bulls, it has some perma bears. But what I like to listen to on CNBC is when they interview people who manage massive amounts of money and are very intelligent people who have great track records. When they come on there, they talk about bonds a lot. They talk about the 10-year. Why do they talk about the 10-year yield? And if they talk about it, shouldn't we also at least be aware of what we're talking about here? Well, look at this. The 10-year yield is something that has skyrocketed in recent years. Now, I say skyrocketed, but really went from like zero back into sort of a long-term average level on the 10-year. I want to show you really quick a monthly chart of the 10-year Treasury yield. This is what you would get handing over your money to the US Treasury for 10 years, and you would collect this amount, 4.29% per year in coupons from the Treasury. You give them your money, they pay you a coupon at the end of the 10 years, you get your money back, right? It's a relatively simple concept. Now, this is so important, though, because the U.S. Treasury is the biggest and most important treasury of the world. They're the global liquidity providers, if you will. When the Fed's printing, everything seems to go up. And when the Fed is no longer printing, everything seems to go down. So when we talk about the 10-year Treasury, this is one of the most important charts that people just don't talk about that much. Now, I know people know what the 10-year Treasury is, but the average trader absolutely does not. They're like, US 10Y, Nick, I trade GBP, JPY, I trade gold, I trade the NASDAQ. And yes, those are like the side stories to this, right? This is the thing. Because when we talk about the 10-year Treasury, this is the Fed making up their mind on where they want interest rates to be and the bond market trying to forecast it, right? The 10-year Treasury is trading based off of those forecasts. Well, the bond yield has skyrocketed in the last few years, but has recently ticked back up again. So we had some progress. People were like, okay, rate cuts are happening. Well, recently, what happened? Recently, it started to what they refer to as it's backing up, right? It's going back up right now. And this is part of the reason why, if you're wondering why the dollar is strong, this is your reason. Yields are going up. That is going to be usually a bullish thing for the dollar, right? Here's the weekly chart of the dollar. And you can see it's a pretty similar chart to the US 10-year. Now, this goes up when inflation expectations are rising or the expectations for the economy are strong, and the Fed thinks, or the bond market thinks that the Fed may not be able to cut rates as much. There's been a big sort of reversal on how much expectations there are for rate cuts. It's almost like exactly what we saw a year ago, right? A year ago, we saw something like this. People thought, here it is, literally a year ago. A year ago, we saw a huge crash in bond yields because people thought Fed's going to cut rates like crazy. And then what happened? Yields backed up, right? It's happening again in front of our eyes. And it's really important that we keep an eye on this because this is a story. Remember, when yields are rising, typically that means that the Fed or the market thinks that the Fed may not cut rates as much, which could put some upside limitations on things like stocks, right? You get the NASDAQ coming down a little bit here today, but it's possible that it's a fair thing to say maybe this is not necessarily, topping out and going to go to zero per se, but maybe it's just stalling out for now. Maybe we're going to see some pause on this NAS rally. Maybe we're going to see some, pause on the gold rally as well, which relies heavily on yields going down, right? Maybe not so much, not a good example to use right now, Nick, because gold is up like crazy, even though yields are up. But I think that's also because people are a little uncertain about what's going to happen with the election, with the Middle East, with Russia. There's a lot of uncertainty in the world right now, and people in those environments typically flock to gold. There's also a ginormous national debt that has people worried, and maybe people are flocking to gold for that reason as well. Gold, to me, there's so many reasons to be bullish gold, and so few reasons, in my opinion, to short it. I don't really short gold ever. It's very, very rare. And if I do, it's with small size. I know you want to look at EU. I appreciate it, but I'm not going to if you spam in the chat. I've got a lot of things to get through here today. I appreciate everybody watching, but if you have a chart that you want to look at, and I'm not currently looking at it, if you spam it in the chat, call me a jerk, but I will actively avoid that chart now that you've said that. I'm a bad guy, okay? Look, S&P 500 pulling back here. I think that what could happen here is that if you get yields staying at current levels, stocks can continue to go higher. The problem is if they start to break through. Chris Pulver made great points. He said, let's mark up our charts on some really important levels. This level and this level are things we need to watch. If yields continue to climb towards this, it's very likely you probably start to see a pullback in the market and the dollar gets real strong, starts to break out. If this happens and we start breaking through the previous high, now you're talking about probably a catalyst for a large scale pullback in the market, like a sell-off, like a hard sell-off, right? So this is danger range. That's the 5% or greater on the 10-year. Where we currently are is a warning level. I wouldn't say we're at crisis point because, again, we're still likely to see rate cuts overall at these levels, right? If the market sees these levels, rate cuts are completely off the table for a while. That's my opinion. I could be dead wrong about that. None of this is financial advice. I'm just an idiot on YouTube. You shouldn't listen to me. But that's my point, is just be aware of the 10-year. Don't forget it. It's a very important chart that a lot of traders don't even really fully understand. If you don't feel like you have a decent understanding of it, I have some videos on it. You should also just search it up on Google and just make sure you understand it because it's really important. Okay, so taking a look at gold, coming back to this for a second. I said I'm not looking to short gold, but it doesn't mean I don't think it's probably due for a little bit of a pullback. It's had such a strong rally here. Last few weeks have just been nothing but upside for gold. I'm not in gold. I really wish I was. I am in Bitcoin, which is going well. I'll talk about that for a second. I'll brag about that trade in just a moment. But a pullback here seems reasonable. Not something I would bet on, but something I'd be interested in if it starts to pull back and we get some confirmation from the EdgeFinder. If we start seeing EdgeFinder show up with gold readings again, right now gold's getting a -2, slight neutral to bearish reading. So I'm not really interested in it at this time. You'll see it has a neutral reading. Anytime something has a neutral reading on the EdgeFinder, it means I'm probably not looking to initiate any new trades. Currently, we have Nikkei, USD CAD, NASDAQ, USD JPY, Aussie Yen, Euro Yen, Bitcoin, Pound CAD, Swiss Yen, Euro CAD, Euro Swiss, SPX, Pound New Zealand, Dollar ZAR, Euro New Zealand. Those are all of our current bullish readings on the EdgeFinder after looking at the commitment of traders data, seasonality, trend, GDP stats, PMI numbers, which is purchasing managers, inflation, employment data, and interest rates. So that's kind of where we're at with all of this. You can see, by the way, that rise in the 10-year yield is already flagging at least some signs of red flags on things like stocks, where you're seeing, -1 for the NASDAQ, because again, what this does is it tracks yields. And if yields are rising aggressively, it's a red flag for indices and stocks in general. So that's how that calculation is working. By the way, we do have, today is Thursday. So today is the last day to get access to the EdgeFinder free event that we're doing. I don't know if you guys have heard this already. You got this. What you can do here is, if you are currently watching with us live, we'll drop a link here in the chat. If you do not have access to the EdgeFinder free week event that we're doing, that ends tomorrow. But today is the last day to get access, because today you can get access to the EdgeFinder for free, and everyone is getting kicked off the free version tomorrow. So today is the last full day to do that for free. We'll get that link dropped in the chat. If you could hear Chandler, I'm not sure. I could see him in the call, but I'm not sure if his... There it is. He got it. Just took a second to find. Thanks, Chandler. Okay, there's the link, guys. If you fill out this form, apply for free access to the EdgeFinder. That ends today. New access will only be granted through the end of today. And then tomorrow, that is the official last day of the free week. So if you haven't already, try out the tool, see if it's a good fit for you. All I ask is that if you do take advantage of that free week, take it seriously, give the tool an honest try, see if it's right for you. And if you like it, consider purchasing it. We're going to have an upcoming sale event, which may be worth your while. So what I would say is that if you have not tried it already, make sure, take your chance to try it for free today. We don't usually do free trials, so this is your last chance on that. Nick, are you sure about not going long on Dow right here? I'm never sure. Never sure. Nothing about markets is certain. How many times in my life have I said, oh, I think this is going to happen in the markets, and did the opposite? At least once, probably more than once. But my point is, I'm never sure, but I wait for at least confirmations to give me a better shot, right? There's never a certainty. It's all about probabilities. Right now, the Dow Jones is getting a +3 on the EdgeFinder. That's just going to keep me keep me on the sidelines to actually taking an entry, right? NASDAQ, S&P, I might take a stab. If you get a flush for a couple days, pull back on these ones, S&P 500 for a bounce trade from here, I like that. Especially going into elections. I think after the elections, regardless of who wins, the market will probably have a little bit of a relief push, regardless of who wins, simply because people can sigh a breath of fresh air. There's people who really want Trump to win. There's people who want Kamala Harris to win. And they're really uncertain about what happens if the other candidate wins. That's just human nature. People want their candidate to win. If they don't, they think the market's going to crash. They think the world's going to end. And that's on both sides. But then at the end of the day, when that is lifted, when that question mark, right, who's going to become the president, when that gets lifted, people kind of just go back to, okay, we know what we're dealing with. We forget about the election. And then, it's kind of like business as usual. So something to think about there. I do think that you may see some volatility in the interim as we count down the days. Maybe you see a little bit of a sharper pullback. But my best guess is that likely we know something about Q4. We know something very historically important about Q4, and we have not talked about it yet. And last year it led to, maybe it will this year, maybe it won't. I'm trying not to jinx it here, but it doesn't matter what I say or feel or think about the market. At the end of the day, it's going to do what it wants. Last year, most of my gains came from these 2 months. Last year, I got very bullish on November 1st. Like, I'm not even making it up. Literally November 1st, I took some big positions on the market. And when I say big positions, I'm not saying stupid leverage positions. I'm talking about sizable positions, my max allocation where I was still risking properly. I'm not going to go broke if I have a wrong call, right? I'm just taking a heavier allocation into indices. Last year I did that, and it ended up being one of my best trades by far of the entire year. Some of you guys might remember the NAS trade and the S&P trade that I took during that month of November and December. That being said, seasonally, it is the best portion of the year, historically speaking, on the last 10-year average, especially following an election, right? Once an election comes through, we've got a lot of reasons here. As long as earnings hold up, that's the key thing here. If company earnings are strong and the presidential election is behind us and the Fed is still tentatively going to cut rates, I love the story for Q4. Cautiously, I'm not leveraging. I'm not being stupid. I'm just saying I think probabilities slightly favor. When I say probabilities, I'm not saying 95% chance we go up. No, I'm saying like 60, which is about the highest probability I think we could get, because the markets are just very hard to predict. There's just too many twists and turns that can come our way. Second, you think you know something can change. So if you can get a 60% chance of being right, in my opinion, that's about as best as you can do. And that's very much a trade worth taking for me personally. You do what you want. But that is my personal take on Q4. Going into 2025, we'll have to reevaluate. Maybe we see a big sell-off from there, but that's kind of where I lean. Okay, guys, we've got Miko in the building. We're going to be taking a look at some charts with Miko, who's coming on the show in just a moment. I think we have Marco also coming up, but I haven't seen him arrive just yet. What we're going to do here is we're going to take just a quick break. Remember that if you don't have access to the EdgeFinder, it is free until tomorrow. We're doing this free week. It ends tomorrow. So last chance to get access to that. We'll drop the link here in the chat if you would like to apply for your access there. And now we're going to take a quick break to thank our sponsor. And then we got Miko showing up to the show. Stay tuned. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show. All right. It's just you and me, I think, Miko. What's going on, man?
Yeah, I think because our clocks went back on Sunday, so maybe Mark is still thinking it's an hour from now. So I think that might be the issue.
Yes. That is always the difficulty, is we have time changes that are different. So our time zone changes, I think, next week. So it'll be confusing next week as well. But I'm sure we'll figure it out. Miko, how's it going, man? What are you what's the latest in terms of charts you're watching?
Yeah, so at the moment I'm kind of looking at Euro USD and to the trade on yesterday. Long on Euro USD so far is going pretty well. Actually, no, the day before yesterday. It's going pretty well. We're seeing some weakness on the USD. So we've had such a big move down for Euro, such a big move up for the dollar. So if you're looking at where that next pullback can be, I've identified some areas here on the daily chart, specifically on Euro, which I like this trend line with these confluences, the first, second, third. I'm looking for that fourth test as well, coming into that low. We saw a nice reaction down the 4 hour, which is where I found the entry. So now I'm just going to see what we can do. I've trailed stops to break even. This candle is about to close in the next 8 minutes, so I will be looking to trail it a little bit further, probably around here somewhere, to lock in some gains in anticipation of NFP tomorrow. So I'll be looking some gains there. I'm liking gold and silver as well, so that's kind of where my focus is elsewhere, apart from Euro USD. It's basically looking to go against the dollar, and we have hit a nice level where the dollar is looking a little bit weak. I'm unsure whether that's going to continue or it's going to turn around, but at least looking at it from a technical standpoint, the market's been bullish for the past 4 weeks, hit a big level. So I do think it's time to see a bit of a retracement there. So that's kind of where my focus is right now.
Yeah, no, I like it. And I think the dollar weakness is a real interesting one to watch, especially the next, day and a half here, because we've got NFP tomorrow. But dollar sort of on that 4 hour chart, you can kind of see the momentum shifting here a little bit. We had an uptrend kind of consolidating and possibly breaking here into sort of more of a downward shift for the US dollar. It's been on an absolute, rip to the upside here recently. Take a look at the daily chart. The question here now for the dollar index is this going to kind of be able to break and close today underneath this level? I've been watching this level right around the 104 level. You can see we had a bounce there. We tested yesterday, gave back a little bit of resistance. But if you see a candle close today on the daily chart, this is at least what I'm looking at, underneath that low, it's probably a fair chance that we see the dollar kind of pull back larger, barring that we don't get some massive, jobs data point that just causes the dollar to, flip back super bullish. But price action wise, it's had a really strong run. It's been due for a pullback for a while. Question is how big of a pullback? Could be a large pullback, right? Could be a move down to 102.5 or 101.8. So I guess we'll have to see on that front. But I like that idea of potentially playing that weakness for a continuation in gold or silver. Which levels would you be looking at on gold and silver?
So yeah, I was originally looking at I think the same level you got marked up there, which is go to the daily chart, which is 2680, I think it was. No. Yeah, 2680. So I was originally looking at the retest of this high, but it never came back for the pullback, unfortunately, and it kind of left me in the dust a little bit. So now my focus is now looking at this area here, which is 27.57 roughly for a breaking retest. And that's basically my game plan for gold, because it's been such a strong trend. I'm be looking for the breaking retest of the recent high. Unfortunately, the past couple of highs, you haven't actually got that, but I'm hoping, or at least expecting it to happen in this turn, because the markets are looking a little bit tired now, seeing a bit of momentum. We're not too far away from the high there as well. So I think it's pretty realistic to expect a pullback to that high. Of course, I need to see how we react there before I enter, but the plan is that gold is still very bullish. The chances are we're going to respect support. So if I do see an indication that the market is going to hold there, that's why I look to take my longs and see if I can take price higher. And for silver, it's pretty much the same setup as well. We've had a really confident break to the upside as well. I'm liking this area, our recent high of resistance. A lot of wicks there. Market broke through with really nice momentum, I think, a couple of weeks ago. Almost had the retest there last Friday. Didn't quite happen, but maybe silver gives us that move there, find some entries in that area, and let's take it back to the high and possibly beyond. We just had a really big break of some daily, weekly resistance here. So silver may start to fly a lot further. So I'm liking the upside potential on both of them. Just looking at breaking retest.
Yeah, I like the idea. I think gold and silver have just had such monster moves this year, and trying to find the top of them has been, we talked about that several times, but trying to find the top has been very difficult. I think that trying to find a pullback has been, rare, but a lot easier this year by far than trying to call the top. So yeah, I mean, if you get a little bit of a pullback here, I like that level you just marked up on the 4-hour chart. That's also a 50% retracement on gold from a technical basis. And if you get a 100% retracement of this recent move, you've still got support here. So I don't even mind the idea of like try one here, try two here. I mean, for me, that's often how I approach, the charts is I know and find entries to be very difficult. And I think most people do after, admitting it to themselves. They're like, wow, entries are very difficult to get perfect. So oftentimes what I'll do is I'll just mark out more than one area where I'll take a stab at a long. So like, maybe I take that idea, put a stop here. If that doesn't work out, I put a stop here, take a second attempt, and maybe I even take a third attempt here, where I've just mapped out these different levels and ideas, and I'm just still looking to get best possible risk to reward if I'm wrong and try and maximize.
Yeah.
So definitely
I
like
look at something similar as well, to be honest, because effectively the market's either going to go up or down. So you create a bias based on whatever confidence you're looking for. Then you're looking for opportunity to trade that bias, and then you have something in place where, okay, maybe I was wrong with that bias, and you stop looking for buys. But as long as you're managing your risk and you're looking at positive risk to rewards, any one of those positions could play out, and it can make up for the potential losses you took early on as well.
Yeah, makes a lot of sense. What about yen pairs here recently? We've got dollar yen actually down a little bit here today, coming back a little bit, but then pound yen also, euro yen. These are hourly charts. Dollar Swiss. What are your thoughts on yen crosses?
Yeah, so yen have been interesting. I'm not really looking to trade them at the moment. They have been slowly grinding higher, and I think on the lower time frames there could be some nice buys as we keep pushing. But for the swing I'm looking for, I just want a little bit bigger retracement. So I'm not looking to do much at the moment. It looks like the market's still kind of steadily pushing higher. So maybe on a intraday level there might be some nice buys from that standpoint. But on the higher time frames, the yen pairs on the daily chart have already had a pretty big move. Pound yen, pretty big move up there. Looking at USD JPY as well, that's had a pretty big move up there on the daily. So I'm anticipating a bit of a correction for these at some point, and that's kind of the move I'm looking for to take advantage of on the buy back up again, possibly. So with the yen pairs, I think they're kind of at some heights where they might be looking to retrace. I'm not going to look to try and anticipate that because they could still push on. The yen pairs have been doing that for the past 2 years now, so I'm not going to try and get into that after we've broken through some structure. But if they do see some more downside the next few days, I will be looking for some buys for dollar yen. I like the high over here around 149. That looks like a nice setup for me, but that might take a week or two to form.
Yeah, the yen pairs have been just a crazy bunch of charts here the last few years. They've been so volatile, so trendy, but also mostly to the upside. It's like it's almost looking like a NASDAQ chart almost. Like it's
Yeah.
trending slowly up
Hmm.
and then just having these crashes that are brief. So been an interesting one to watch. Speaking of indices, do you have any thoughts on S&P, NASDAQ? I know you don't particularly trade them, but you know how the audience
Hmm.
is. They want you to clamor to them, whatever they want to see. And most of the time it is gold. So they love their gold, they love their NASDAQ, love yen
Yeah.
pairs. So what are your thoughts on indices?
Yeah, so indices, I did see they had a bit of a dip there. I'm still pretty bullish on them because in terms of how I find my bias, it's mainly the daily chart in terms of finding a bias, and the daily chart is not showing me any signs of reversal. Maybe signs of slowing down and struggling to push higher, but that just tells me we might just have a deeper pullback at some point.
Mm,
This is NAS 100. We're still kind of grinding high in this channel. We've got the high here on the left, which I still do think we're probably going to see a new high at some point. Maybe the news might be the catalyst for that, but in terms of the technicals, we're still grinding higher, staying pretty consistent with these higher lows. So as long as we stay within the channel here, I do think there's a good chance for a push to the upside. If not, if we do break out, then we might just go through a deeper pullback, something similar to what we did with these two swing points here. That low, we might see another one at some later stage. But otherwise, I still do think we're probably going to push higher. Same thing for US 30 as well. The question really for me is how big the pullback will be until we push up. So I was speaking earlier today on my channel about this area here. I like it for a buy, and also the level here as well should we break through that. And S&P as well, that's a similar market. Um, that's giving a similar setup as well, which is how far, can't spell today. How far will we pull back before the market is likely to continue the trend? I like the daily high here as well. That is a really nice swing point, which is still a bit of a way down. So if the market does become pretty bearish, I think that's a nice place for a buy. But at the moment in time, we're still testing this area here, which I like too. So overall, the indices, I see more upside. My guess is just how far will they pull back before they continue really.
yeah, no, that's definitely fair. They've had such a strong, run for so long. It's now that there's a little bit of selling happening, I would not be surprised if you see a larger scale kind of pullback in the short run
Hmm.
to maybe go retest some areas of key support, whether it be this 38.2, the 50% retracement, and lining it up with that level you drew too, that previous kind of all-time high resistance zone that was a big break and retest spot for us recently. So may go back and test that. We'll see, especially with some rocky next few days with the election. We will certainly have to
Hmm.
see how that impacts the charts, what it does to things. And I'm definitely going to be watching the indices close. Other things we're watching, Bitcoin. I do still have a trade on Bitcoin, Miko. This has been
Nice.
it's been going decent. So,
Hmm.
what are your thoughts on Bitcoin? Are we there? Are we close? I mean, no, we're still just around the all-time highs. What are you looking for on Bitcoin?
Yeah, so I have to say I'm a big admirer of that breakout there. Really, really nice move. And in my book, I would be looking at this to continue a lot higher because this is how I kind of drew the channel, connecting the lows there using the bodies mostly. And I think that's where you kind of had your position. So really nice break to the upside. And the key thing I was talking about on on stream last week with you is I wanted to see the break of 70K, and we saw that really nice with big candles. Because sometimes you get breaks with like kind of small candles, and it's kind of but this is a really nice candle there. I think the weekly looks like it's going to close bullish. We'll see what NFP has in store. But to me, I'll be looking at pullbacks and upside. I think with Bitcoin, especially with this big channel here, the possibility of maybe another move like this is a real possibility. Of course, will it happen? We don't know. But I think positioning yourself long and looking to try and shell a stop and just being open to potentially a big move might be very rewarding if it does go for that big move. And if it does fail at the high here and it has some trouble and maybe it decides to go for a big range again and starts to do something like that, then so be it. We analyze that and there could be an opportunity later on. But the thing is, Bitcoin is breaking out. We already had a big move here. This could just be a pause in that. And now we see the continuation. So if we were to see some pullbacks, retest some highs, I think the reward is definitely worth the risk. And possibly if you can break the high there as well, who knows how far Bitcoin can push into.
Yep, I tend to agree. I mean, it's been in this range for so long. And finally, you're starting to see some momentum pick up. The question will be, if we do get things like pullbacks into this area, can they hold them well? I've got my stop loss trailed. In fact, I think I'm going to tighten my stop loss just a little bit more, because really that psychological 70,000 level, the previous high, if we do pull back into that area, I'd be looking for a pretty quick snap off of that range. And any extra risk there, in my opinion, is just risk I don't need to take. So I'm probably going to trim my stop loss just a little bit more here on that trade, and just see if I can, potentially see if we get, higher lows, higher highs, and just keep going. If that happens, I'll stay in the trade. If it doesn't, then I will, I'll take the profit that I've made here and just move on. So we'll kind of see, but I agree. I think that the risk to reward here, we don't, as you mentioned, we don't ever know for certain what's going to happen in the markets, but the risk to reward here looks pretty good in my view for a possible kind of continuation idea of what we saw in 2023. When things got real bullish, there was these massive runs on Bitcoin. We've gone into a long period of consolidation. It's possible that we have kind of we've gotten to the other side of that, and we might start to see this thing make a bigger move. If not, we go choppy, then I just take profits. I wait for another attempt, but we've waited for a long time here. And I finally think we're starting to see some momentum building for Bitcoin. So we'll have to keep an eye on it. It's starting to become more interesting to talk about on our weekly sessions than it was for the last, year or so. So very, very good stuff. Okay. So next thing, let's see. We pretty much did everything. So with that said, Miko, thank you for coming on the show, man. I appreciate it. We hit all of our charts here today pretty quick. For everybody who is currently watching with us live, Miko has his own YouTube channel. He comes on every week. We do all these charts together every week, and we just kind of go through a technical breakdown of each. If you are not already following Miko on his YouTube channel, he's got some great free value over there. You can find him on YouTube. We dropped the link here in the chat. His @ is Miko Audu. You can find him there. You can find him on socials, all that good stuff. And do us a big favor here at the A1 Trading Show. When we bring on guests, they come on voluntarily, and in return, we hope to help them kind of introduce to new people and find a bigger audience themselves as well. So Miko's got his own great audience, but if we can kind of help him out with that, he's definitely deserving of it. So guys, make sure, go find Miko on his YouTube channel. Miko, thank you very much for coming on the show, man. Appreciate it.
Appreciate it. Thank you. Have a good one.
All right. Have a good one.
Bye.
All right, guys, we're gonna keep going here. We've got some news behind us. We got about 20 minutes to go till the U.S. stock market opens up. I don't know if you guys saw this, but there is a push, it seems, for like longer trading sessions on the U.S. stock exchange. Did you guys see that? I think they want to introduce like 20-hour day trading on the U.S. stock market, which would be kind of crazy. I might never leave the office if that happens. I might just set up a sleeping bag in here. Did you check out gold yet? Yes, we looked at gold, but we can double back and just see how it's going. Gold coming down here a little bit. We marked up some ideas technically wise for gold, although I will disclaim here, fair warning, that these are not trades that I would take personally, because I don't trade off of a solely technical approach. I do incorporate fundamental analysis into my trading as well. I look at the economic data points. I look at the commitment of traders data. And currently, when we look at the top setups page, we don't have gold giving us a very strong confirmation in terms of, scores to look at. So for me right now, even though technically gold looks very good, I'm going to wait to see what jobs data comes out to on Friday. If you get some really, weak jobs numbers, that could give gold a nice boost in score as people may flock to it. But currently not quite there. So if you get a big gold pullback and the score flips around in the EdgeFinder, I very well may take some longs on gold, but currently no interest in actually taking positions. Though technically it looks great, it can be deceiving. Sometimes the technical charts can look beautiful, but if you don't have that EdgeFinder confirmation or the fundamental confirmation more so, it's not a trade for me. So sidelined for gold right now. Silver's pulling back as well. And again, what I mean by that is when I say a technical chart may look pretty, this may look pretty, but it could be like one big old trap, right? This thing could just flush down to this because right now I don't really see the fundamental catalysts. So if you get some de-escalation in the Middle East and or you get the election kind of resolving peacefully in some way, one way or the other, that uncertainty comes right out of gold's price and could come down. So that's what I mean by fundamentals are just, in my opinion, very important compared to technicals. Technicals are a good way of kind of reading what's going on, but fundamentals and economic data are the story that are actually driving prices. NASDAQ is pulling back. We're at a level of support. I'm very curious to see how this level holds or doesn't hold today. NAS trading at 20,270. Off the daily chart, we may have a little bit more room to come down and test some lows here. But let me clean up my charts here, a little ugly. We tapped very briefly into this previous structure high. You can see this is definitely where we've been finding support. So we'll see if that kind of repeats and if we can bottom out and kind of make a move higher. I'm sort of leaning towards that. I'm leaning towards a bullish November. I'm leaning towards a bullish December as well. And, I like the idea of possible longs. If we can get some dips here today, I'll be watching things like the NAS, the S&P to see if I can find some decent trade setups there. Watching your live after 3 years, that is awesome. I appreciate you supporting and watching the show. It's been a while since I first started doing these shows. I did these going all the way back to 2018, believe it or not. What do you use to trade gold, Ivan says. Ivan, sometimes you just come in here and I know you know these answers. So you just like ask me these interesting questions as if you're just one of the new viewers. I don't know what's fully wrong with you, Ivan. Something is off. I'm just kidding. I love you, Ivan. Ivan is a regular stream contributor and he loves to mess with me in the chat. Anyways, big thing here for me too is my kind of primary position right now in a weird way is Bitcoin. Bitcoin is one of my best running trades currently. I am looking for this thing to take out the highs. And if that happens, I'm going to trail my stop up into this range if we can take out the highs. If we don't, I'm just going to hold it. I want to give it some room. I'm fine with it even pulling back all the way down to 69 and potentially pushing from there. Well, I just want to tighten my stop loss a little bit more here this morning. I'm probably going to do that. And I'll share that update in the Discord. Speaking of, every trade that I take gets shared inside of our Discord channel. Anytime I take a new entry, anytime I update an existing one, trail stops, have a thought on the markets during the day when I'm not streaming. Every trade that I take gets shared here. I do the most of my trading shortly after, live stream for a couple reasons. It's very hard for me to multitask in terms of like actively place trades, dig through the fundamental analysis that I want to do, and then take trades. I usually discuss and update trades that I'm doing, but then I reserve that kind of component for our members. Unless I see a trade that I'm just like, oh, got to take it right now. But I'm not a scalper or a day trader. So like I'm not super pressed time sensitive wise to take entries. When I see them, I can take my time. It's one of the nicest low-key things about it being more of a swing trader is when you have an idea, you're not like frantically sprinting to take a trade. It's like a relaxing process. It's not nearly as stressful. I can take my time to write it up and it's not incredibly time sensitive. How much is it to join your Discord? We have a couple different membership options. You can find them on our website, a1trading.com/VIP. And if you have questions about upcoming discounts, which there are some very big ones, hint, hint, we'll drop a link here in the chat to send a direct message to our support team. Thank you for that. Link has been dropped in the chat. If you guys would like some early information about upcoming discounts on memberships, stay tuned or send us a direct message and someone from our support team can get you some info on that. But yes, within the Discord, you see every trade I take every day. Anytime I take one, I trade FX, commodities, indices, and much, much more. Last call, by the way, this is the last call. If you have not already taken advantage of the EdgeFinder free week, the free week period is ending tomorrow. Today, however, is the last day to get your access to the EdgeFinder free trial. If you have not already, we'll drop one last link here in the chat to fill out this application to get your free access. All you have to do, click this link, share your contact info with us, and someone from our support team will reach out to you with your copy, and we'll answer any questions you might have about the tool. So take advantage of the free week if you haven't already. That is ending tomorrow, meaning everyone loses their access on Friday to the free version. If you enjoy it, you can purchase the full tool, and then you've got it for good. Okay, guys, we're going to take a quick break, and then our next guest is taking over the show. We got Forex James coming in. Forex James is a regular stream contributor. He's got his own socials. He's got his own content. One of our heavily requested stream guests here. We'll be dropping his socials as well in the chat, so keep an eye on that. Or you can go to elitetraders.io to get some information about what he has to offer. Stay tuned. Forex James taking over the show right after this. You know, this EdgeFinder thing is pretty cool. I can trade it all sorts of different ways, and for me, I like using fundamental analysis and macroeconomic data to try and make better decisions. What do you like to use it for?
I'm more of a proponent for the COT data or the business forecast tool.
Did your tooth just fall out?
It was my baby tooth. It'll come back. Hey, at least I don't burst into flames when I step out into the sun.
Trading without the EdgeFinder can be scary. The EdgeFinder keeps you up to date with all the most important market-moving information. Check out the latest COT data, retail sentiment, fundamental data, and so much more. This week only, you can have 100% free access to the EdgeFinder. But don't wait. This offer is available for this week only. If you want access to COT data, top setups, and so much more, click the link being dropped in the chat now to sign up. Again, this is 100% free access to the EdgeFinder, available this week only, so don't wait or it'll be too late.
For a second there, I thought the jump scare message was about me coming on. I was a little bit offended, but I see what he's talking about now. Hello, I hope you're all doing great. Approaching the end of the week, it's now Thursday, so we are calming down. We've had the US news. We do have a little bit more coming out shortly. We've got Chicago PMI. And then tomorrow is going to be busy. We've got NFP and unemployment. So, of course, that will give us some more light into the labor market. However, talking about right now, we have got euro dollar pulling into a very nice area of interest. So what we've got is previous structure, 200 daily moving average. And this might be an opportunity to get into some short positions to the downside. I'm still looking to short euro dollar. I'm currently in some DCA positions. I'll show you those now here. So you can see I've added in twice already. So I've got half of a lot size on here, 2.25 positions split up. And essentially I'm just going to keep adding on to these until I'm satisfied with the value of euro dollar. Obviously, we do have, as I said, we've got the news tomorrow, so that will also give some light into whether euro dollar still has some room to the downside. But as far as I'm concerned, it does. We are seeing a little pullback today off of today's news when we had PCE job. The initial jobless claims was actually really good. So again, a nice little bolster for the labor market. PCE is what is pushing down the dollar at the moment. I am in a dollar yen buy position. This was sent to my Discord this morning. This one was very simple. I explained my day trading strategy quite a lot, but essentially it's just a bounce off S3, which is support 3 based on previous day's moves. And we still have the daily trend bullish. So it's a very simple trade, really. Risk-free, obviously, into news. So it doesn't really matter what happens with this trade now. But yeah, there's not really too much else I'm looking at. It's mainly euro dollar. I've actually noticed that pound dollar is now creeped up. So the pound dollar wasn't reading on here. I think it was neutral a couple of days ago or even yesterday. So now to see pound dollar reading bearish is quite a nice sign. Although I think I might be done with the pound dollar shorts. So if we have a look here, pound dollar is still respecting our structure through here. Let me just pull up the research I've got. So here we've got the GBP, bullish pound. Goldman Sachs suggests short euro pound trade. The UK macroeconomic backdrop is relatively positive with further potential upside on budgetary changes. Now, I'm not certain on that yet. Obviously, that's from Goldman Sachs. That's not my input yet. I still need to do my own research and back up that idea. So I'm just a little bit on the fence with going short euro dollar right now, especially with this 200 daily moving average here could act as a sort of dynamic support. So it's just a little bit concerning. So happy to sit on the sidelines for now. Facebook emojis. Someone's got Android. Gold. Yeah, we can have a look at gold. It's funny, you guys ask for gold every day and there is nothing to do. The same thing every day. Just got to wait. We are having a bit of a pullback here, obviously off the US dollar news, maybe some profit taking as well. So as I said yesterday, the first place I might look to buy gold is on this 50% level or within this fib level here. This obviously lines up with sort of, it's not super strong structure here, but it's enough to take maybe a 0.5% risk and give it a go. But yeah, it's tricky to buy gold at the moment. It's a extremely high prices, obviously, relative, in 5 years it might be very cheap, but for now it's still very expensive. So yeah, just nothing to do here. What can you do? Nasdaq, yeah, we can have a look at Nas. Yeah, so Nasdaq is on EdgeFinder as well. We've got a score of 7, so the bias is bullish. Let's see what the technicals are saying. Euro AUD. I was actually stopped out of Euro AUD this morning. Yeah, we can go over that one in a minute though. So Nas, luckily I didn't take this trade, so we can remove that. Actually, this pullback might not be a bad idea to buy into. This trend line looks quite convincing. 200 moving average. We've also got the RSI oversold here on the H4. So I would enter this if we can see a 4-hour bullish engulfing candle. So if we can see this H4 candle close above this previous bearish candle, I might take a long position off this. Just continue riding this trend. We've created potentially here a higher low to continue this trend up. Obviously, like I said earlier, the EdgeFinder is bullish. So far, all the factors line up quite nicely. So I'll keep an eye on that. I'll add it to my watch list here. So yeah, Euro Australian. So yeah, we were short. You can see the position here. So at the time, it actually looked really good. So we had obviously the European Central Bank cutting their rates quite aggressively. We've got overall relatively weaker Eurozone data, but then Germany's data came out. Then we also had the Australian data come out, and I can't remember exactly what the Australian news was. Let me have a quick look. Where was it? I can't see it. Just give me a second here. Oh, it was CPI that came out for the Australian dollar. So that led investors to start thinking that the Central Bank of Australia is going to start cutting their rates, which obviously at the moment they're holding, or it's perceived they're holding, and that sentiment might have changed now. So this short position is no longer valid. It seems like actually it's more of a potential buy opportunity rather than a short. We're an aggressive push down after range, and that form price we push. Yeah, I'm not going to say your name, but yeah, I agree with what you're saying. So pound yen. I'm actually looking to get short on the dollar yen. So I've been saying for quite a while that I do expect a full correction. However, if you guys have been watching my segments for a while, you'll know I have a plug in a hedge fund, and he sent me a bit of a heads up that he's looking to short. So he's sending some research over in the next couple of days, which unfortunately I can't share with you. I can give you a rough overview. But yeah, so I've taken a long position to then eventually get into a longer term short. So I'll try and give you some juice when I can. Thoughts on the S&P? Let's see here. So the S&P is a reading of 5. So we do have a bullish score in the S&P. It's the weaker of all of the indices. So you can see we've got NASDAQ, Nikkei are much stronger. So the S&P is probably the weaker choice, really, but we can have a look at the technicals here. Actually, the technicals don't look too bad. We do have this level through here. We're about to reach this 200 moving average on the H4. We've got the RSI oversold. We've got the bullish reading. So maybe this isn't a bad opportunity to get into a long. I'm not sure I will, because we are in earnings week. So it's a little bit risky. Let's see. What else do we have here? Do we have the fib? Oh, we do. We've got this 50% level as well that lines up really well with this previous resistance or structure. If you're willing to take the risk, then it's probably not too bad of a trade. Careful what you say, bro. You'll get done for insider trading. No, there's no insider trading. It's not, I'm not talking about, I don't have a guy that does news report or data releases or anything. It's just a guy that works at a hedge fund that can pass over information. I've not heard of him in a while, so it's quite nice to get a message off him, give me some source. Australian dollar yen, also on EdgeFinder, has pulled back significantly. Yeah, problem is with Australian dollar, I've gone back to being quite cautious. I've been very up and down with the Australian dollar recently. So yeah, for now, I'm just staying away until I get more clarity on what the central bank's going to do. Yeah, it'll be interesting to see if gold can hold this level. On the H1, actually, it looks a little bit better here. You could see price come down and meet this 200 moving average and sort of sweep. That would be quite nice. The RSI is already oversold. Yeah, I quite like this idea, but again, there's nothing we can do until we get there, and then we can react rather than try and predict it. Both AUD and JPY seem weak fundamentally. Yeah. I can give some more light on the yen idea probably next week when I have some more information. But yeah, the overall right now, they don't seem too good. So the yen actually is having a little pullback today, nothing major. The pound did have a pullback, and now it's heading back to the downside. Euro's heading up as well. And this is likely off the reaction from the US dollar news. So you can see the roadmap here. I mark out the data releases, or I've started marking out data releases, because if you do this, it becomes a lot easier to sort of map out what the dollar might do and start arranging and positioning yourself according to this. So for example, during let me draw a box actually. During sort of this period here, it was actually quite easy, and that's when I made pretty good money just buying the dollar. So yeah, for anyone that doesn't do that, I would recommend doing it. How's everyone's week been? Have you guys made some money? No, I ask this all the time, and no one actually replies to me, so I'm assuming it's not normally good news. Silence isn't always good, as they say. So yeah, I'm a very boring portfolio at the minute. I've got nothing on. Euro dollars sort of paused. S&P still not doing anything. So regarding the S&P position, the entry catalyst for this would be the same as what I discussed on NAS. We'd need to see this H4 candle close bullish with enough sort of momentum to continue the move to the upside. If not, then yeah, it wouldn't surprise me if we actually come lower and start testing the next level of structure, which would be through here. So this next sort of support level. Let's see, yeah, not quite. Okay, well, we've got two levels on the S&P that we could buy from, so we can pay attention. Yeah, I have, fortunately. Well, it's not fortunately if you followed your plan. It's just the way it goes. So far, I'm at 20K. That's amazing. Made some money only on demo. Fair enough. Wow, 20K. I'm up 90 USD. Lol, small account. Just $1,000. Well, still, don't look at the money. Look at the percentage. The money is irrelevant, really, especially if you're deploying or employing compound interest. You deposit every month, slowly gain on your obviously on your winning trades, and eventually you'll snowball. Can you do Australian dollar CAD? Yeah, we can go on to that in a sec. My week's been good. Made small profit on DAX yesterday and entered another long this morning. Yeah, good. Actually, this is another point for anyone that was in the stream yesterday. The DAX trade that I told you guys about worked out really well. Let's see here. Where is the DAX here? Trade history. Yeah, so it's this one. So I told you I took a long, it was an entry at the point. Then I told you I was going to close out after stream, which I did, and we closed out this. I think I got about 1% on this, so it wasn't crazy, but a 1% basically for free because it was such an easy trade. And then I took, I think, a break even roughly here. So yeah, pretty good trade on the DAX yesterday for you guys if anyone followed it. Although I don't suggest following my trades on here. It's obviously not what I'm here to do. So yeah, Australian dollar CAD. Let's go and have a look. So yeah, actually, let's see what oil's doing. So if we're expecting the if we're expecting oil to continue losing value, which I'm not really bullish on oil, but I'm not super bearish. I'm kind of neutral. So the Canadian dollar could gain strength as oil possibly comes up to correct the gap that we saw in the market. Obviously, the Australian dollar, as I was saying earlier, I'm kind of on the fence about, more bearish than bullish on the Australian dollar. So it wouldn't surprise me if we do see slightly lower prices. To where? Not sure. I'd really be looking to go something along these lines, maybe just a 1-to-1 or a 1-to-1.5, nothing too big. I got crushed by gold, MDR sell start yesterday before closing time, got stopped out, and now look a really good trade. Yeah, it's unfortunate. It happens to the best of us. I got €4 with my own entry. Good stuff, people. That's what I like to hear. Yeah, gold has been very difficult, really. Any thoughts on Euro Yen? Euro Yen, interesting. Let's see. It's continuing its move to the upside, but for how long, I don't know. Let's see. It seems, to be honest, that the rate cuts by the ECB are priced in now. I think that's what we've seen, really, was a lot of weak data for the euro, pricing in of the rate cuts by the European Central Bank. So it seems like the euro has potential. I'm not saying I think it will, but it has potential to start strengthening, especially if the data starts coming out a little bit more positive. So for now, I remain on the idea that we could see some sort of correction or continuation of this corrective move that we're seeing from the carry trade unwind. But again, I can give you a bit more juice on the yen probably next week. But yeah, for now, I don't see an issue really with going short the yen, long other currencies. But really, if you were looking to go if you were looking to go long, if you were looking to go short on the yen, you'd want to go long more on dollar yen or pound yen. I think euro yen, Australian dollar yen have a little bit more headwind ahead of them compared to the others. So it'd just be maybe, I'm not saying again, this, you know, obviously not financial advice, but it just seems like it might be a bit of a smoother trade. By the way, what provider are your charts from? I use MetaTrader for the trade I showed you when I open and close trades, and then I use TradingView, which is this, just for analysis. I'm looking for buys in the zone you drew up for Australian dollar CAD, but for tomorrow. Yeah, just be cautious. Yeah, Australia is in a little bit of a difficult place, and obviously it depends what oil prices continue to do. It's a big factor with the CAD. NAS 100's dropping. It is dropping, actually. It's not really respected our level very much here, has it? So I was just reading a message. We do still have a supportive factor here, which is the 200 moving average. We could still bounce off that quite nicely. It's not uncommon for this to act as a dynamic support, almost as it has done here. So we could still see this bounce. It's just the trend line that's been broken. But the problem with trend lines is they're very discretionary. So, you know, we could just pull it down and it works perfectly here, follows this 200 moving average. Or you could pull it up and it's just got more wick touches. So don't take trend lines too seriously unless it's like a specific rule-based strategy you use. Yeah, trend lines get swept. I'm not a huge trend line trader. If it's there, I'll draw it, but it's not really part of the way I trade at all. It's normally just to, you know, visualize the market rather than actually trade from, if that makes sense. New Zealand dollar, US dollar has been on a huge run to the downside. And I think this is going to continue as well. I don't see really any stopping point until we reach the 0.59155 level. And then after that, the next one will be 0.5868. So yeah, I think this actually is probably the best short position at the moment. Euro yen still hanging around our structure level. I'm tempted to go short on here. It's just not quite there yet. Yeah, it's got a bit too much bullish momentum really for me to sell it right now, but we'll see. Maybe my stream tomorrow or next week, you guys will see me in the short. Depends how the market moves. Just trying to have a think here. Let me. Oh, actually, you know what would be interesting? I've not looked at in a while is the Fed Watch tool. See what the sentiment is around this. Interesting. So yeah, it looks like there's no at the minute. It seems like there's very little probability of a hold. So it seems like we are going to have a cut, which is expected. I don't think anyone's not expecting a cut. The thing is, NFP is going to be crucial, really, to see was the previous NFP of 200 and actually I'll put it up here. Was the previous NFP that we had here for 254K, was that just a one-off? And we're going to go back down towards the 89K, then we'd start looking, okay, well, what is the Fed going to do? Maybe they are going to revise, or well, maybe sentiment's going to get changed more to another 50 basis point cut, along with obviously unemployment. So we really need to pay attention to what's going on tomorrow, which will be interesting. Actually, I'm not sure if I'm on tomorrow. Let's see. It'll be interesting. I know we can have a discussion about it. I am, same time tomorrow, so we can discuss the NFP then. Cool. Okay. Seems like the S&P is still hanging around our level. Not too much happening here. Actually, when do we have the next news coming out? News is in 19 minutes. So we can watch the Chicago PMI and we can watch the results together on that one. But yeah, for now, the markets are quite quiet. It looks like we're in the aftermath of the previous news and the sort of eye of the storm, I guess you could say, in between news events. Dollar yen, not doing too much. Only 0.5% profit. It's not really good enough to close. Yeah, tricky spot. I would like to get short on the New Zealand dollar, but I think I've already missed my entry points here, unfortunately. It's actually a little bit unfortunate. If we have a look here, I must already have it. Oh yeah, here. So you can see I was short. Let's see, when was it? Yeah, here. I took a short position here, hit take profit, took 2 more short positions here and closed them at break even. Because at this time we were sort of just stuck in this range. So I closed it right before the move that I was actually expecting, which was really sad. But there you go. What can you do? Did you look at USD CAD? Actually, I don't think I did look at USD CAD. Yeah, so we are seeing a pullback here. This trade's done. I think we do still have more room to the upside. However, this daily chart actually looks quite nice for a short position. Just selling basically from a key level rather than it being anything too specific. So, as I said previously, the only way I would actually get into this market will be from an event. So it'd have to be an event-driven trade waiting for that catalyst, which would be likely just a news event. And that news event could be NFP or unemployment. If we start seeing a weaker NFP, higher unemployment, that might cause the dollar to lose some of its steam and then pushing the dollar CAD back down a little bit, which would be nice. Again, selling from this really large level of resistance off a news event would be, yeah, it could be quite a nice money maker actually. Possibly back down to these lows here, something like that. Thoughts on GU? Yeah, I mean, we covered GU, but I'll do it again. So pound dollar is a tricky one because it does read bearish on the EdgeFinder, but the problem for me is that price is hanging around this level of structure. It's not breaking either way. It seems like we've got indecision in this market at the moment. This 200 moving average is still above price, and overall the UK right now doesn't seem too bad in terms of the data releases. Also, the rate cuts we were expecting, or the rate cuts that were announced by the Bank of England, have already been priced in now. So that's also a factor, removed really from the bearish pound idea. And again, with NFP coming tomorrow and the weaker dollar that we're seeing today, right now, this short position doesn't seem like a good idea. But also long positions don't seem like a good idea. I don't want to start selling the dollar either. If you look on the H1, you can see what I mean by it's just stuck here. There's nothing really going on. So yeah, it's a tricky one. Let's have a quick check on gold. Let's see what's going on there. Is anything happening here? Oh, we're continuing the steam train. Let's see actually on here. I actually might have to take this buy. Let's see. Yeah, I think I'm going to start looking to go long on gold here. And this is based on just technicals, really. So obviously these aren't signals. I'm not here to do signals. This guy has no idea what he's doing. Yeah, that's true. Who's this? My name's James. No idea what I'm doing. Yes, I do trade full time. 27.39 is pretty strong based on volume. Let's have a look. 27.39. Sorry, am I supposed to sit here and talk about FVGs, or what would tell you that I know what I'm doing? So yes, I think this level actually isn't bad overall. Anywhere within, let's see, anywhere within 2,739 to 2,749 is my buy zone. If we don't reach this level, so if price just now flies to the upside, then trade scrapped. If we don't hold this level, if we don't have some sort of bullish engulfing candle here, then again, trade scrapped. So we need to be waiting for a very specific entry opportunity on gold, because what we don't want to do is buy into a falling knife, because gold can be very unforgiving, really. So yeah, not happy about that at the moment. See dollar yen still not doing too much, so we'll start there chilling. Dollar NOK, New Zealand dollar. Euro dollar starting to see some small rejections, but nothing too major right now, which is a little bit unfortunate. S&P still heading to the downside. Also, the NAS is still heading down. So yeah, the indices don't look like the play today. Even for a short-term trade, it seems quite risky, really, at the moment. Yeah, there will have been people buying here, actually. Let's see here. Buy there. Yeah, there will be people buying off this level of support, looking for this sort of, yeah, a general support play, and stopped out, which, you know, isn't something I want to get into. So I'm going to sit out of the indices market for today. 27.39 is previous weekly max volume. We could maybe look for buys if we reject on H1. Yes, I completely agree with that idea. I actually don't use volume or like volume indicators at all, really. So I'll take your word for it. But yeah, I think the general level that you're talking about is quite strong. But yeah, there's quiet markets today. Let's see, how long have we got until news? Oh, news is in 4 minutes. Let's see here. So we've got PMIs coming. Let's shift this over here. We'll put candles on and we'll go down to the 15. We'll see what type of reaction we get. Might not be anything crazy, but it's worth watching. Okay, so the Chicago PMI, let's see here. So what's the categories? Let's do today here. Let's also put it on here. There we go. So previous was 46.6. Actual has just come out at 41.6, which is a decrease. Forecast is 46.9. Yeah, it's not really what we wanted to see. 41.6, 46. Okay, cool. Hold on, let me just do my markups here. So we've got Chicago PMI is 41.6. Oops. There we go. Yeah, okay, fine. We've not had really much going on today in terms of news or news reactions, really. Okay, cool. Sorry, guys, it's a bit quieter today on my front anyway. I went short pound dollar for short time, question mark. Well, let's see. So we went short pound dollar. I actually don't mind a pound dollar short from here. So the reason is we opened below the daily pivot. We've continuously failed to hold above. I'd say the overall bias or the sentiment is to the downside still, especially for the for a short-term trade. Yeah, I see why. I don't mind that. Yeah, okay, fair enough. Let's see what euro dollar. Euro dollar's finally moving to the downside. Let's have a look here. Oops. Here we go. Euro dollar. Oops. Yeah, cool. It's a shame. I actually wanted it to go slightly higher so I could enter again, but that's fine. There's nothing I can do about that, so I'm happy to hold this. What do you think about prop firms? That's a good question. So let me show you something. Now, I'm just going to make this very clear that this is no affiliate, no recommendation, none of that, because I don't work with prop firms, but I have taken one here. So I'm currently in this in phase one here, currently up 3.2% on the account, approaching halfway to the profit target. Today up $400, so not much really. But yeah, you can see overall pretty healthy. So to answer your question, I actually don't have anything against prop firms. I think you've got to be very careful because there are very dodgy ones out there. It's very, very easy to get scammed. So for example, my Forex funds, I think it was, or I can't remember the name. It was MFF, the ones that went down, the ones that I think it was the SEC got them or something. I bought challenge with them the day before they went, so I lost money there. There's firms that don't pay out. So yeah, you don't know what's going on behind the scenes with them. So only ever go with ones you trust. So yeah, you just got to be careful. And it's absolute money pit if you're not actually profitable. If you don't have a strategy that can pass a prop firm, all you're going to do is lose a lot of money trying to pass one. So yeah, just be cautious with them. They are a great way to make money though, if again, if you are profitable. But yeah, sometimes you need to adapt to the rules they have. So for example, I have to adapt. So I take smaller risk positions and close them quicker because I've got no interest in adhering to sort of proper trading rules on the evaluation. I care about passing it as quickly as possible, really. So that's the goal. But obviously everyone's situation is different. Thank you for your response. No problem at all. Yeah, Nazi's just melting. It's crazy, really. Oops, didn't mean to do that. Okay. Let's see. So now is kind of make or break for Naz. Do we see the rejection right here, or do we continue to the downside? Because what we've got is this level. Oops, this level here. We've got trend line, moving average, RSI. So if all of this is broken, then it's not a trade I'm interested in at all. However, if we can start seeing rejections in this area in general, it'd be quite a nice opportunity to get long. Longs in NAS are getting cooked. They absolutely are. Yeah, longs in a lot of the indices at the moment are getting cooked. I was long the S&P this morning and closed relatively break even. And in hindsight, I'm really glad I did because that would have been a very quick stop loss. Longs in NAS getting cooked. Oh, I just read that, yeah. Australian dollar CAD just tank. Thoughts real quick, please. Let's have a look. Did it just tank? Yeah, I suppose it had a quite strong move here, didn't it? I'll be honest, I'm not entirely sure why. Let me have a look and see if I've missed something here. What day are we on? Oh, this week. Yeah, there's nothing pointing out to me on why that move happened. I'll be honest. Where do you see next support in NQ? I just showed you NQ. I'm not going to go through it again, but I'll hold it here for a second. Oh, I deleted it. But essentially, basically where we are. So we've got this moving average RSI. We're coming up to this double bottom. So if we don't hold here or show any sort of rejection, then there's no reason to buy this one. Phantom, it's good to see you. Hey, James, what's the story of Euro Australian? We've already gone over it, so I won't go over it again too much. But basically, the German data was quite supportive of the euro. And the Australian CPI came out, which was more of a signal towards the Central Bank of Australia looking to start cutting their rates. When obviously at the moment it's more of a sentiment that they're holding, so that weakened the Australian dollar significantly against the euro. Are you out of the XLR trade? I think you've got the wrong person, Simon. So yeah, interesting markets, but there's nothing to do in terms of, there's no real entries. We can see what gold's doing right now. If gold's got any rejections here, we're coming up to our level, which is nice. Yeah, so make or break here for gold. Same with Nasdaq. CAD is pumping at the moment. That's why. Yeah, the CAD is pumping, but why? Why is the CAD pumping is the question. I'll have a look after stream. Yeah, not ashamed to say I'm not 100% sure. Nvidia is down. That's why NAS is down. Is that right? What the hell's happening to GU? You guys are confused. Actually, let's have a look here. Yay, euro dollar's doing okay again. That's nice. Yeah, so it seems like the dollar's gained some strength. So obviously that's affecting the pound dollar, euro dollar, New Zealand dollar, etc. As soon as you said USD will go down, it hit my TP. There you go. I'm a wizard. I made the algorithm. I invented the Japanese candlesticks, or whatever else is said in this in the retail landscape. Are you still looking short EU now that it's gone from EdgeFinder? Cal, yes, I am. I'm already in shorts. I'm currently DCAing down. So unfortunately, it's actually dropping a bit sooner than I wanted it to. I wanted to get some more shorts in at a higher price. But there you go. So, you know, if I'm making some money, I'm making some money. Who am I to complain about that? Yeah, I don't know why as well, but I believe it's fundamental. Yeah, something will have happened. I'll have to have a look after stream. US 10-year is back up. Good. That's interesting. I mean, the dollar's up, so it's a given, really. So yeah, Nasdaq is slowing down here. Is this our time? Could we get a similar trade to the DAX one yesterday, where we just take a short, a long position, but a short-term trade? I am up on USD JPY. Yeah, I called dollar yen for my guys this morning. It's actually doing quite nicely here. Almost 1%. Here's a little plug, guys. I do send signals. I run a Discord server. If you want signals and economics, bank reports, all that jazz, then feel free to head over to my website. Currently have 50% off. But yeah, I'm not here to shill you things. Luckily, the A1 team are very generous with me doing that. But while I'm on a little plug, you can also use code ELITE, one word, for a discount on the EdgeFinder. NAS also just touched value area low. After that volume falls. Yeah, so I'm looking here on the. Actually, I'm going to go over to day trade this. Let's have a look here. It's going on 15 is what I'm interested in. So actually, let's see, what price is this? This is 19,950. 19,950. Just give me a second here. 19,950. Okay, interesting. Yeah, I would like to see slightly lower. Actually, looking at this, I'd like to see S3 come into play here. That would be ideal. It would also come and meet here, I think I'm going to do that. If we can see slightly lower, I might take a really aggressive entry off S3. Stop loss tight. So I'd say possibly here. Take profit maybe somewhere here. Let's say here for now. So we'd be looking for sort of a 1 to 3.5 really. But again, you know, I'm not here to give you signals. This is just my thoughts in the market. You know, I might not take this, so don't set pending orders and things based on what I'm saying. That seems scary. Trading is scary. You've got to have your system in place. And this is my system. I trade the pivot points on a daily basis, up and down, and follow the market. Actually, that leads me on to another point. So very quickly, for anyone that doesn't understand what these are obviously pivot points based on previous daily moves, and there's statistics behind them. So for example, S3 has a 94% chance of being rejected. So it has, a 94% chance of price closing back above S3 if it's broken. So I'm playing statistics when I place a trade in S3. That's why I'm aggressive, because sometimes it can yield amazing results, and then obviously sometimes it can just go opposite, completely wrong, but it's right more than it's wrong from my experience. So I'm more than happy to take that. Let's check up on gold. Let's see what gold's doing again here. Also seeing a bit of a slowdown. Yeah, I'm getting ready to start putting some positions on. The problem is, and again, I have got to be very careful, because I don't want to hold these into tomorrow. So I need to be cautious that I have to close these trades out by tomorrow morning, if not sooner. Because actually, I'll elaborate a little bit on that. So if we are looking here at NFP, the previous was 254K. Consensus and forecast are very low compared to that. Now, previously on this result, it blew expectations out of the water by over 100K. So it's not wild to assume, or to use the previous jobs data we've had, which was quite good this month, to suggest we are going to have a higher than expected NFP again. But obviously these consensus and the forecast, it's, you know, based on something, so we've got to also account for that. So I'm just cautious on trading into the news. I'm not looking to really do that. Hey James, how do you think people hey James, do you think people are taking profits ahead of NFP tomorrow? That could also be the case, Seven. It's a good point. I didn't think of that, especially on gold. Yeah, that could be quite a big driver, actually, what we're seeing on gold here. Risk off seems to be the theme today. I'd actually say it's risk on as gold's dropping. Normally when it's risk off, we see gold rising. Actually, let's see. Although, yeah, obviously the indices are down. Swiss is up, so I see what you're saying. But yeah, gold's down, which is interesting, really. Okay, cool. Nearly at 1% on dollar yen. By the way, do you know where I can get data like the front page setup on EdgeFinder? Yeah, you can go to www.edgefinder and buy it. Use code ELITE. No, but in seriousness, if the EdgeFinder isn't something you can get or want to get or whatever, you can use other websites. And these, obviously, the point of EdgeFinder and other sort of collection services or aggregate services is they put it all in one place. So it takes a lot less time to go and check the EdgeFinder compared to having to go to something like Fred, which isn't showing here. So Fred is here. And what this does, it shows you data. So you can go here and type in unemployment, unemployment here, unemployment rate, and you can see this graph. And this goes all the way back to, when was this? 1948. So you can get data quite easily, but then obviously it's not aggregated for you. It takes a lot more effort, a lot more time, and it's a bit of a pain in the ass, to be quite honest. So save yourself some time. Invest in your time is what people say, isn't it? Put money to save time. So buy the EdgeFinder. So dollar yen's rocketing, which is nice. The euro dollar position is also doing quite hot. So you can see I've actually been on a bit of a roll on euro dollar recently. Took a loss, but that was about, I think that's the only loss I've taken actually on euro dollar for the past sort of month or so. Oh, I took a loss here as well, but then made that back. Short, 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 short. So yeah, dollar yen, sorry, pound, euro dollars paid quite nicely this month, which is nice. Gold's still steaming down, although it is in the AOI, is what people say, I think, area of interest now. So we'll see how it reacts here. This is the only place at the moment that I'm looking to buy. So we need to see a nice candle close from here. Guys, we've got about 10 minutes left on my segment, and then I think it's Chris coming on. So if you have any final questions or anything you want me to cover specifically, let me know. If not, I'll just keep rambling and doing what I do. Let's look at the Nikkei. Interesting. The Nikkei still... Oh, wait, no, hold on. It's got a score of 6, which actually is quite a decrease, really, from what it was. I remember, I think it was the top rating at one point. And now we're starting to see this move to the downside. I actually might start looking to go long on the Nikkei at some point here. Yeah, we'll see. Is the Fed the only good website where I can get data from? No, sorry, I kind of only covered half the topic there, I guess. So yeah, you can use Fred for unemployment, inflation, those types of things. You could use Reuters, which is free. FX Street is quite good for insights. CME is very good as well, especially for commodities. Trading economics. So for example, here you could go to markets, you can go currencies. If you want to look at euro dollar, you can get a very brief sort of breakdown on what's going on with euro dollar in terms of the macros. Bloomberg is really good as well. Obviously, you do need to pay for Bloomberg. Investing.com, Financial Juice is free. Bar Chart's good. Yeah, there's so many websites out there. What do you think of silver? Interesting. Silver's also melting. This might be another one to keep an eye on here. Yeah, so similar thing with silver. As I was saying with gold, we'd be waiting for this level to get hit with the 200 moving average. RSI is currently oversold, so we'd really be looking to go long off here. Stop loss would be below these lows here, or at the lows maybe, and then yeah, we just trade it up. I still think the commodities have room up, especially silver and gold. So on these pullbacks, buy positions in my book make a lot of sense. Yeah, exactly. Like I don't know if it was Nick or someone else, but yes, the top setups page on the EdgeFinder takes tons of various sources and combines them. Exactly. So it's for example, what I'm going to show you is how COT data looks. 1 second. CFTC is the word. So if you want to get the market data, let's have a look. I can't even remember which is the right one. It's the, hold on. Is it this one? Futures options, futures only. So look, It's not that one. I can't remember which is the right one. It's been so long since I've used COT. But yeah, this is what COT data looks like. So this is how, for example, the EdgeFinder, I assume it's automatic, will get this information, aggregate it, and give it to you in basically just 2 bars or whatever it is. So rather than you having to trudge through all of this nonsense and try and make sense of it, it's all automatic. Can you see any chance of indices reversing momentum? I can. It's just a little risky at the moment. So normally what we see when we have strong moves like this candle here, you can see the same thing here. We have these corrective moves where we come back up, correct it, and sort of reprice and then continue in either direction. So it wouldn't shock me if we do see the NAS and the S&P have some sort of pop to the upside. I mean, just based on the way the market's moving today, I wouldn't expect it to be huge. But yeah, some sort of move to the upside is expected from me. Could I get your thoughts on EJ? Sorry if it was already covered. Yeah, it's already been covered. Don't worry. So EJ, Euro Yen, is here. So yeah, Euro Yen is at the moment still bullish in my eyes. The problem is the Euro I'm still quite bearish on. So sorry, I was checking time. So yeah, Euro, I wouldn't be looking to really buy this market. I'd be looking really to buy either pound yen, dollar yen, Australian dollar yen, and Euro yen in my book of the week or two. So it'd be more a case of, I would expect dollar yen and pound yen to give you a smoother trade. But that's obviously speaking about right now. If you're looking for a full corrective move, you might be holding this for a couple of weeks. So economics will change by then. So yeah, just keep that in mind. But overall, I think yen still has room to the downside. Gold showing a little bit of a rejection here. We'll see how this 15-minute candle closes on the next one. Yeah, APIs aren't cheap. It can cost a lot of money to run something like the EdgeFinder and keep it maintained. And unfortunately, it's not that easy to really build something like that. So it's I've had a few people in my Discord build like their own versions, and they'll do it for a couple of weeks and then they'll give up because every day they're having to update it with new things, whether it's new unemployment data or new COT report, whatever it is. And it's just a hassle. So final checkup on dollar yen here, starting to reject S1. So I'm going to close this, I think. Close this for 0.6. I just need to send the message. Okay, cool. I'm up on AUD USD. Why do you, I don't know if you're asking me a question or if you're telling me, I don't know how to take that message. You want me to check Australian dollar, US dollar? I tried to build one myself, though. I would rather save time and look at this channel. Yeah. So yeah, no slowing down at the moment for these indices. Yeah, nothing to do here. I like the way gold is moving from here, though. I think this is a very good sign. If we can reject structure, 200 moving average, RSI is oversold, it looks like a really nice opportunity to get into gold and possibly to hold it. I'm still looking for this 3,000 level. So I've been speaking about 3,000 for quite a while now, probably the past couple of months or at least a couple of weeks. So let's hypothetically say we can go long gold here. Stop loss will be there. What would that give us? That would be a 1 to 7. It's not too bad, really. We'll see. Don't want to get ahead of ourselves. What broker you use? I use two. I use IG Markets for a spread betting account, and I use Blueberry Markets as well. Oh, you want to ask what my view is on AUD USD? Okay, I see. Let's see. I would suggest it'd be more to the bearish side, especially now we've got more of a neutral to bearish sentiment around the Australian dollar. And the US dollar still is doing quite healthy, even though we've had a bit of a drop today. Relatively, it's only a minor drop. So yeah, I'd be waiting really for pullbacks to get short. Or if you're already in short, then I'd be quite happy to stay short. Is it safe to buy gold now? I don't think it's ever safe to really take a trade. You're always putting money on the line, but I'm looking to buy gold, but not right now. I need to see a bullish candle close first. We would need something really bad fundamentally for dollar and economical uncertainty for gold to build momentum to 3,000. Not necessarily. I'm not saying I expect gold to rocket up to 3,000 now. I'm saying 3,000 within the next 6 months to 12 months, maybe even sooner. So we'll see. But yeah, 3,000 I don't think is a wild target. There's a lot of banks that have 3,000 targets on gold. Cool. I've just got the message, guys. Chris is here, so don't leave. My time is up. It's been a pleasure talking to you all as always. I'm on tomorrow at the same time, so make sure you tune in. Have a great day. Have a great rest of the day, and I'll see you all later. Thank you for having me.
Oh, Chris Pulver took a trade in our Discord.
Oh, really? Let me see.
Pulver alerts are now available in the A1 Trading Discord. If you want access to everything Chris Pulver is trading, click the link down below, or click the link being dropped in the chat now to speak directly with a team member.
Hey everybody, happy Thursday. How we doing? Screen share is coming up right now. What's happening out there? Earnings on Altria up, beat earnings per share, revenue gapping up pretty strongly from the 50s up to 53.95. I do have some good exposure on this. I own the shares under 40 bucks. I'm trying to not get it called away for further upside, but unfortunately I can't do much with it to roll my calls, which I'd like to, but I'm not going to. So if it gets called away, I'm still making like $11 to $13 a share, which is totally fine. If it falls back down to fill this gap and we get back down to the low 50s, maybe I can roll it again and kind of play this dividend game. SPY is down today. So here's SPX. We had a big gap lower. Futures was down all morning. Let me go into this. Where's my 15-minute candle here? There's my 9:30 candle. There's my 9:30 candle. Is that right? Yes. So we had a nice clean breakout. I would be watching futures for something like this. If we have a break, retest, more downside, or break, retest, more downside, or if we come all the way back into this 15-minute breakout candle, let's say we go here and then look to fade that. I don't know. It's just down. Everything's down. So it's okay. I mean, the pullbacks everyone's been asking for it. I've been asking for it, and here I am seeing it. And it's like, oh my gosh, I wish it wouldn't pull back. That's what everybody thinks, right? But take a look at our levels. Here's our SPY. Here's the daily time frame. We are pulling back into a pretty decent level of past support. So here we go. So this week's candle officially turned red. Last week's candle's red. We had this slight pullback just over 2% from the all-time highs. This yellow box that I'm showing right here that's closest to price, this is the FOMC gap from the September Fed meeting. So we had this close to this rip higher. That is a big gap that hasn't been touched yet. So we came back to find a little bit of it right here, for some intraday support, but we have not come all the way back down to fill. So I'm not saying that we're going to, but it looks like if this floor, this was resistance over here, that was support, and now we are below that. So if that floor is breaking, pressure is to the downside to see if this gap gets filled. So be it. If that happens, fine. I have hedges for that exact reason. I actually looked at some of my trades this morning. If you're in my pulver alerts, we have some hedges on ES and MES, and those are looking pretty good right now. And if they get a little nastier to the downside, they're going to look even better. So I want to take a look at those trades right here. So MES versus ES. This one is, let's see, MES is, that trade's looking good. It's up about $300. The other ones are down, so I'm break even on my MES, but if it goes lower, these should look a little bit better because I've got some time in the trade. ES is a little bit more active, but these are all hedges basically. So this one is a 111. That's for income. Hopefully that one pays out by the end of November. It's either a profit trap in a kind of ideal situation. We'd have to drop all the way to 4,800 for me to have any type of assignment here. Unlikely going to be the case. I've already got 90+% of the profit on the put side. And I have a bear trap as well. So adds up. So the trade itself is 3450 minus 401 or 4063 plus 1243. It's up $630 right now. So this trade is up about 630 bucks. And if I let it go all the way to expiration, it's going to be about the same thing. Probably another, there's another 10% of profit in there. So I'll get about $700 of profit out of that with no assignment. Obviously, it's a futures contract. I'm not looking to get assigned on it at all, but we have to drop all the way down to 4,800 for this to be a threat. Doubtful that's going to happen. So I'm okay with that one. And then I have the same type of trade here for another 3 trades. And let's add this one up. So I've got 600 plus on one trade. Here is minus 340, minus 862, and plus 1275. So that one's up about 73 bucks. Now this one's way out of the money, but same thing. This needs another couple of percent. This one's probably just going to be full profit for a couple $100, to be honest. It was so far out of the money, it's probably worth, $100, $150 max profit. This one is similar. So what do we have here? Let's go profits on these expirations. November 15th, this trade. We add this one up. So I've got a minus 460 plus 1140 plus 3655 minus 3982. This one's up $353. So all in all, I got about $1,000 of hedges working on ES. Out to the 8th, I've got this broken wing butterfly that this one's looking pretty good as well. Currently, it is around break even or so. Still got about 35 to 40% left in the trade, but let's see, minus 8,797 plus 16,425 minus 7,087. It's up 541 bucks. Okay. So do I take the profit now? I mean, it's out to next Friday. If we stay below 58.90, it looks better. If I show you the analysis on this trade, here's what it looks like. So there's the trade. This is where we're currently trading, right? I have a profit trap on this thing towards expiration next Friday. If we come all the way back up towards 58.90, let me take a look at this on the ES feed. So what does it look like on ES? 58.90 would mean we have to come, oh baby, this is actually looking pretty freaking good if you ask me. So that's a broken wing butterfly that has tail credit, profit trap, and then risk. Price would have to come all the way back up here. And guess where that gets me next week? Into my profit trap. So there's a way that I can turn, a $1,000 hedge into possibly a $2,000 to $3,000 gain if I get in that profit trap next week. So I think my goal on this one is if we're lower, I'll keep the $1,000 hedge profit, and that's right here. If we get this thing to pay $3,000 or $4,000, yes, please. And that would mean we have to come all the way back up towards the weekly highs. And I think going into next week with election, Fed, there could be some drama there. So I don't know. I mean, obviously I could be wrong and I could lose on the hedge, but if this one in some way just gives me $1,000, that's a pretty good win. So I'll see how it adds up. Okay. All right. Thoughts on Nikkei. Tesla, yep. Take a look at that. Qs. Okay. Qs with a frowny face. Yeah, we'll take a look at everything. So that's actually I'm pretty excited about the ES feed. That broken wing butterfly is working out nicely and sitting on about $1,500 or so in hedge profit. But I want more. I mean, I'm not trying to be greedy. I'm just saying if I'm going to hedge, might as well make it worth it. The whole point of those hedges would be to get paid, 2, 3, 4 times what I'm risking to make it worth my while and offset any type of drawdown I'm sitting on. So if we go to the SPY, we're trading at 573. The levels I'm really watching, and I've been talking about this for weeks, right? Look, this is a 21 moving average. This is a 50. This is a 100. This is a 144. All I'm looking for is to see if price will find support. Find it and find support. Find it and find support. Same thing on gold. Same thing on stocks. If these are coming down to these dynamic support levels, I'm just looking to see if price will find support. Okay, so right now we're in between the 21 and the 50. If there's a little bit more pressure to the downside, I'm just going to wait. If we come down to the 50, maybe I put on a credit spread at the 50 or put on a bull call spread at the 50. If I come down to the 100, same thing. This to me, dynamic support, go out 60 to 90 days. I will 100% put a trade on. But for me, just to see that, we're gapping lower, I'm not that antsy to put on a trade right now when I've been patiently waiting for pullbacks. So we're finally getting them. The hedges are looking better, and that's what essentially I'm going to write off profit-wise. And then we got some earnings plays today. So, Meta beat earnings, Microsoft beat earnings, but they're both down today. Why? Futures market's down. Okay, fine. Stock market's down. Fine. I don't need to force a trade. Okay. So I'll wait. Qs, same thing. So the NASDAQ is in between the 21 and the 50 moving average. If we come back, it's the same thing. Do we find the 50? Do we find the 100? Cool. Let's find them and then see if we go higher. I think the Qs have, are they interested in finding all-time highs for the year? Probably. In my opinion, probably. As long as we're not doing any type of damage below this 470 level on the NASDAQ, if the QQQ stays above 470, I'm still pretty bullish. And I'm not even bearish if it gets below that. I'm just saying, this is the dynamic support and resistance that I'd want to see hold, right? So if we come back into, this level here, I'm looking to see if it will slingshot back up and try to get to all-time highs. That's just staying with the trend. There's a lot of support in these moving averages. I'll just be watching them. Okay. All right. Dow. The Dow's been pulling back. Same thing. Here's the 21. Here's the 50. If the Dow pulls back into here's the 50. If we pull back into this level, past resistance becoming support, that's right in between the 50 and the 100. If we see a close below and then a close above, I might put on a trade on the Dow, try to take this back to all-time highs. Could it come all the way back down to this level? Sure, we could have this big nasty pullback towards the 200, but I'd still be gladly taking some buy trades there on the DIA. Okay, so I'm just going to wait a little bit and see. If these sell-offs get a little bit more aggressive, fine. The nice thing about today is there is a gap here that eventually the market will be interested in possibly filling. So if it falls a little bit lower and I can position here or here or here, then that target would be a gap fill. And I can do that based on a debit spread or something. No big deal. Okay. And then the Russell, same thing. Russell's actually been a little bit more resilient today. Not as bad as the other ones. Dow's down 0.7. NASDAQ down almost 2%, 1.82 on the Qs, and the SPY's down 1.31. So somehow the Russell's hanging in there with a point, what was that? 0.5, 0.7? Where's my Russell at? 0.56% down today. We have seen some interesting divergence on these indexes. It's like the NASDAQ's outperforming and the Russell's getting crushed or vice versa. So it's an interesting shakeup between, what indexes are performing best. Volatility is absolutely higher on the day. As we're going into, major news, we had U.S. news today. We had PCE that was a little bit hotter. Year over year came in hotter than expected. If we have earnings this week, it's like earnings have been okay, but the bar was lowered so much that maybe the market's not that excited about it. Price to perfection. We've been talking about that. It's the reality right now. Even Microsoft beating, even Meta beating, Google, was up and it's fading. Apple and Amazon are today after market. We'll see what they give us. Mag 7, if the stock is dropping or futures is dropping, everything goes with it. That's the one downside about the stock market is even if stocks are popping, they can fade very quickly when the overall market's dropping. We take a look at the heat map this morning. I'm assuming it's going to be like all red. Yes or no? All red. Look at that. And led by your Mag 7s. Look at that. Microsoft had earnings yesterday and they beat earnings on top and bottom. They beat earnings per share and revenue. Nvidia's down 4%, Microsoft down, semiconductors getting crushed right now. Meta's down 2.97, Amazon down as well. I mean, those are big market cap companies that are down on the day that's dragging the market with it. Okay. But those are also large enough to take a top heavy concentration of market cap and drag the markets down too. So even though there's a decent amount of green sprinkled in here, it's not that great. I mean, advanced decline is probably, I was going to say we got 70% of stocks declining today so far. That's not great. So just be ready for, a bit of a pullback day, and it's fine. Pullbacks are good, everybody. I'm telling you, like, pullbacks are okay. Pullbacks are justified and warranted when the market hasn't done anything but make 47 all-time highs. So I'm happy to see a pullback. I know it's going to look like, the sky is falling because the media takes it that way. Like every single day the market's down, people lose their freaking minds. But we're down like just over 2%. I hope we have a 3 to 5% correction, and the market's healthy enough to buy that dip. If we get something nastier and it's 5 to 8, 8 to 10, it's a little bit scarier, but it's still a dip. It's still an opportunity for longer term trading for sure. Okay. All right. Let's see here. SPXY. I'm sitting on that one. DXY. Still not ready to call a trade on the dollar yet. I think this is a lot of chop. Trades I'm in. Euro pound I'm in. Let me see the currency strength for today. Currency strength for the day. Japanese yen. Classic. Euro pound. Ooh, euro pound looking good. Yep. Yeah, baby. Euro pound looking good. My euro pound, I bought it around 83.45. Now it's up some decent profit, trying to get this back into 8,500. That would be coming back into this little dynamic resistance ribbon, possibly higher. I mean, this is major support. I don't know. We'll see what happens. Right now, this trade is up around 70 pips or so. I'm going to see if this gets all the way to 8,500. If it does, then I will cancel because I don't think I filled a one trade. So this trade right here, if it hits my profit, take the profit. I'm going to cancel that trade and then not have anything else running. So just going after a little swing scalp on the euro pound. But that trade is posted last week, so doing pretty well. Aussie CAD, I started to get into Aussie CAD as well. I've got 2 levels on the Aussie CAD. I put this in my pulver list for Forex. I bought there. I'm buying here. My stop loss is below. And I'm looking to see if we just have another dynamic support level to see if we get back to the same highs or higher. I'm looking at 9,400 on my profit target. But I put a take profit at 93.80, which is the previous high. Okay, there's that one. I'm still long on my Swiss pairs, which looking at the currency strength chart, Swiss is a little bit stronger along with the yen. Let me see. My Swiss yen is doing okay. It's probably pulled back slightly, but not enough. Yep, Swiss yen's fine. I'm like super tiny in this trade, and I probably will hate this trade. So if I get stopped out, I get stopped out. I'm not over trading it. Anything else? Currency wise, dollar index wise, I don't really like the dollar right now. I think we have a bunch of noise. We got non-farm payroll tomorrow. We got the Fed next week. The probability of the rate cut is still 98%. It's likely going to be the play. We have earnings that's pretty much heavy earnings this week. I'm not sure what other notables we have for next week, but let's find out. Let me go stock twits here. Stock twits. Let's go to earnings. Let's go to next week. So next week would be the 4th. What other notables do we have? Qualcomm, Under Armour, Sony. I mean, I know there's a bunch of them in here. There's a lot of stocks getting reported next week. I mean, I'm counting here. It's probably another close to 1,000 stocks. 165 plus 158 plus 354 plus 419. I mean, there's over 1,000 stocks reporting next week, and it's like, oh, there's 3 notables. So, I mean, there's a lot, but I think this is going to get lost in translation when it comes to the election, which would be Tuesday. The Fed is on Thursday. The market, what we talked about is if we don't have a winner, if we don't have a clear winner, if all of a sudden it's like, well, ballots aren't in and this state can't produce a winner yet, they don't know the determining factor of popular vote versus electoral college, probably not going to be a good sign for the market. So I would just expect more volatility to come in next week, and just be ready for it. I mean, I'm sitting here with $850,000 of buying power. So I want to trade something, but I'm not forcing a position to trade. That makes sense? There's no reason for me to be, putting in heavy amounts of position right now when we could have pullbacks, dips, opportunities that I'd be glad to start allocating money to. But I'm not there yet. So I'm just going to be patient. I think there's plenty of good opportunities ahead, and I'm happy to see that we have some pullbacks finally coming into the election. This makes a lot more sense based on typical seasonality, which is a bit of a pause, a bit of a pullback as we go into the election week. Now, I don't know if the market actually thinks of the election as a big event. It's kind of more out there, like the emotions of the market's like, oh, there's all this uncertainty. But I also think the reality is we've seen inflation numbers come in hot. CPI, PPI, and PCE all came in higher than expected on the year-over-years. That's not a good sign. Okay, I looked at the bond market today, and yields are flat. Let's go to the 10-year yield. Okay, 10-year yield is up another 0.4%. Let's change this chart up. Hang on, sorry. Change this there. Let's go to this chart. Now let's go to the 10-year yield. So the 10-year is just continuing to grind. So, I mean, I do think the scary thing is if this rallies higher, this will end up probably breaking the equities market. In some capacity, whether we get to 5% on the 10-year or higher, the equities market will fold. Because the Fed cannot keep cutting rates as this is rallying, and the neutral rate is supposed to be something right around this 2-year. Okay, so the 2-year is trading at 4.2. The Fed is literally going to be there by the end of the year. Because right now we went from 5.25 down to 50 basis points jumbo cut for 4.75, another 25 basis points in November, which is next week, and we're going to be at 4.5, and then December looking for another 25 basis points. The Fed in September to December in 3 cuts has decided cut 1, cut 2, cut 3, and we'd be sitting at the neutral rate. So what happens if the 2-year goes higher? I mean, does the Fed all of a sudden start raising rates again in 2025? I don't know. But it doesn't look good. So just saying, word of warning, the one thing I'm actually the most concerned about is this. Can everybody see this? The 2-year versus the 10-year has disinverted. The 10-year versus the 3-month, this is a very aggressive, rally towards disinverting. This is probably the one I'm most concerned with. So if this doesn't turn down, this is not going to be great, in my opinion. I don't think having the 3-month and the 10-year back in the disinverted side is going to be great. So this has usually led to a recession. This has usually led to some drama in bear markets. So I don't know. I mean, if we look at the 10 versus the 2, it's disinverted and it's kind of paused right there. But this 10 versus 3-month is just on a warpath to get back to the 0 line. So watch it. But this is the most obvious, longest, deepest inverted yield curve that we have ever had on the 10 versus 3-month. So, and we've talked about this for months and months and months. Something on the radar would be this disinverted 10 and 3-month. We did disinvert on the 10 and 2. All these things are kind of stacking up against the market, continue to perform higher. You may have read the report from Goldman Sachs this week that said, Goldman Sachs for the next decade is only anticipating 2 to 3% gain in the S&P. Well, there's the conversation of the lost decade, that the stock market is priced so high and priced to perfection that it's impossible to go higher at these valuations. I mean, Goldman Sachs is a terrible forecaster, by the way. I think they throw garbage into the headlines because they're positioned the complete opposite. So when they say something like that, I'd say the market either drops 10 to 20% or rallies 20%. I would not take if it's 3%, fine. Then we'll just trade strangles and iron condors for the next 10 years and we'll make a fortune. But it's not going to be that easy. Okay. All right. But it is weird to see that the market is at all-time highs. The Fed is cutting. But the last time we did that in a cycle like this, it's possible this is still going to be treated a little bit like the late 90s, which still had some gas in the tank. So if the Fed is looking to get that late cycle expansion or even getting that late cycle reset, there's still gas in the tank. And this AI stuff, I mean, let me just ask a question. How many of you think that AI is going away? Nobody. AI is here. Okay. AI, sure, it's a little bubbly with prices and valuations, but it could also be Internet 3.0, right? And what it's going to do is it's probably going to make companies do more with less, which means more productivity, which probably means better profit margins, which means more cash on hand, less debt. Okay. The trick is if you make more money as far as profit margins, hopefully you're not just throwing that into CapEx. Hopefully you're not just spending it to be like this AI infrastructure. And like we talked about, I think I said this yesterday on the show, the big deal with this AI infrastructure is we need energy to do it. And so I think an alternative play than just being long tech is being long energy, being long utilities, being long boring stuff that's considered value. But this year it's actually been showing signs of good performance. And a lot of those utility plays, especially, they have high levels of debt, which is not going to be great if we have rates going up. But if we have rates coming down, you would think that the debt restructuring would be a little bit more favorable. So they are typically low volatility, they're low beta, they're non-correlated, and they're, value plays. So if we have a rotation from, growth to value, that's one way to look at it. If we have more of the energy play, energy is a good diversifier from just being long tech, obviously. So there's going to be opportunities. That's all. So we'll see what happens. Okay. And yeah, that's another good point. Ryan says, I think it's awful for employment. I do too. That was my other point on AI. Companies are going to do more with less because they're going to fire a ton of people. And if you can't see that coming, then you didn't pay attention during COVID, because COVID was going to show that companies are coming back post-COVID, and now AI, they're coming back leaner and meaner and stronger. And companies now aren't even going public. There's a lot of tech companies out there that are using ChatGPT and using AI and using, large language models that are never going to go public, and we'll never see them traded in the S&P or the NYSE. They'll just stay private. And that's a whole nother bubble on the sidelines, because private equity is not valued the same way that public equity is. And that's a scary thing, because it's basically, if you're willing to pay for it, it's good. Does anybody watch the movie Arbitrage with Richard Gere? Okay, terrible movie with one of the plot lines, but as far as what he did with his business, that's what I think of private equity. He was basically a huge accounting error that was intentional. It was completely illegal, but he ended up packaging his entire business, selling his garbage to somebody else for what he wanted out for. And then he said, oh, by the way, my daughter's going to be your CEO or vice president, something like that. And the guy took it. So private equity is like that. If it's good enough for somebody else, sell it to them. And I feel like, if you look at like the Ivy League, your Ivy League endowments, Yale and Harvard, they have been underperforming for years and years and years because they are so heavily invested in this private equity stuff that it just shows like, yeah, there's no volatility. There's no volatility. But if it's not sold for anything profitable, it just sits on the books, showing that it's like, it's steady. But if nobody's willing to pay for it, it's freaking garbage. So anyway, AI is doing all that stuff. Okay. AI is great for corporate margins, bottom lines, but it's terrible for the employer or the employee. But that makes me think about companies like Tesla. Okay. Tesla and Elon Musk. Elon Musk probably doesn't give a crap about any human employee. Elon Musk cares about running the world on robots. So if he does, Tesla could be one of the most profitable companies in the world. And if that mentality is taken through a lot of these publicly traded stocks in the tech world, well, it's good for investors because these stocks just make so much money. It's ridiculous, but it's terrible for the worker. So you got to wonder, what is our country? If we're a country that's run by humanoids in high tech, that's great as far as productivity, but it's terrible for the displaced workers, where all of a sudden unemployment is 6, 7, 8, 9, 10%. We'll still have a recession if employment's bad, right? Absolutely, because 70% of our GDP is consumption. So if we're not buying stuff, we're not making money. And if people aren't making money, there's no tax revenue either. So just saying, it can get a little nasty out there if, this is not all navigated. So again, I'm not here to be doom and gloom. I'm just saying there's stuff to navigate. There's going to be some tricky things ahead, but our job is to figure out how to trade it. I'm hoping we have some pullbacks. I think pullbacks are good. I think the market still has its eyes set on higher highs. I think it's easier to think if you're, 3 years out, 5 years out, 10 years out. Passive investing and long-term investing is fine. But look at those bigger levels. Look at those 5s and 10s and 15s and 20s. If you've got dry powder and cash at the ready, deploying money at those levels will help make you gains in the long run. Big gains in the long run. Okay. The one thing that is difficult right now that kind of goes against the grain of these current gains, these current highs, is we have credit spreads that are as tight as they've been since 2007. And usually the returns on that are lackluster. When credit spreads are wider, it means there's more volatility. We typically see better gains over the next 1 to 3 years. But when they're tighter, we see like minimal gains, like literally 2 to 3% over the coming year or two. So I do think there's limited upside, but having a pullback of 3 to 5 to 10% is cool. There's at least upside there to revisit all-time highs. Okay. All right. Let's take a look at some other currencies and some requests. Oil. Yeah, oil too. I mean, oil is continuing to pepper that floor. We're trading at 69. It's up off the lows a little bit. I'm not playing this dangerous game of chicken on oil. I think that we keep testing this low. If we want to see the inflation story improve, I think oil ends up crashing through this floor. You know, what makes inflation way worse and way hotter and way stickier is oil comes up here. But if oil breaks this floor, you know, again, it's probably not a great sign for oil at all, and it could cause some more, you know, more tensions in the Middle East. But as far as energy prices, as far as gas at the pump prices, that might actually help our inflation data. But I don't want to call this and say, oh, yeah, that's a strong support level, because it has been sitting here with literally conflict in the Middle East. It has been sitting here hammering this floor for literally a year and a half. And we're also making lower highs. So if we break this floor, this thing could be dropping fast by probably $10 to $15. So I'm not trying to call the floor. I called the floor a couple times and got fortunate on my CL trades that made some money. But I'm not trying to. I have 0 positions in oil. But I think it's something we have to watch. Okay. DXY dollar yen. Yeah, DXY is still sideways pathways. I mean, I like the dollar as far as there's a lot of pairs attached to it. If I go to my dollar crosses, Aussie dollar, we're sitting right in the middle of this bigger range. What I'd love to do on the Aussie dollar would be somehow this thing give me some support, and I'd be looking to scale in and level in on Aussie dollar there. Okay. I think China is also a factor with the Aussie dollar to turn up. If we go New Zealand dollar, Aussie dollar, I think China is a big factor here. One thing that could be coming out of the election for us, US election, is once it's clear, I wonder if China is going to be more vocal and have another, I don't know, maybe they'll actually dump more stimulus into the market, maybe another 100 billion US dollars, another 5 trillion yuan, whatever it is. But if they can lift animal spirits by the end of the year, I think the Aussie, New Zealand do a little bit better. I'd prefer that they were at a level of support that we can buy from that looks pretty technically solid. So down here would be like 64, 63, and 62. I'd be looking to buy, you know, Aussie dollar from there. If I don't get those levels, I mean, that's the unfortunate thing, is maybe it doesn't come down low enough and I still get this move to go higher. I just didn't get the support that I wanted. But it's worth keeping an eye on. We go to New Zealand dollar. Okay, New Zealand dollar is much closer to a floor that I would say 2 spots. Okay, one, I've already got it marked. And then over here, same area. So there's lows around 58.60 and there's lows around 5600. I'd be okay trading small enough where I take a buy trade here, a buy trade here, and a buy trade here. And I just wait, because if that bounces or that bounces or that bounces, I like that to the upside. So I'm going to be patient. I'm not calling tops or bottoms on the dollar index. The dollar index has had that bear trap run and that big squeeze to the upside. It's sitting here going sideways right now as we have non-farm payroll tomorrow. We have the election and Fed next week. I'm going to let the dust settle. If it goes higher, cool. If it goes lower, fine. If it goes higher, this actually looks a little bit more attractive to me. The New Zealand dollar at 58.50, let's say 58.50 down to 5600. I like that area to be scaling in small and then working a position back into major support. I mean, we're talking about 2020, 2023, and current lows here in 2024. If that structure gets tested, I would love a buy spot there. I think that's good for a few hundred pips. If we have a range trade from 56 back to 64, that's a 800 pip range. Sign me up. So I'll be watching those levels closely. Dollar CAD, dollar Swiss, I'm still in those. So dollar CAD, I'm looking to get a breakout trade. This is another reason I'd be long. Dollar CAD is a nice way to express a short position on oil without having to trade oil. Okay, if the floor of oil breaks, dollar CAD is probably going to make a break through 1.40. And if we stack this move up, all this is a multi-year range. If we break this and measure it, dollar CAD gets up to 144, 145. BOC has been way more dovish than the Fed. Cutting rates a little bit faster. Their economy's in a lot worse condition than the U.S. is right now. I can see the CAD getting a lot weaker. So I'm stacking these trades up. They haven't been filled yet, but these are all my buy trades stacked up for a nice little gain. Okay. Euro dollar. I'm just going to hang out on this one. We started to turn up a little bit on the euro dollar. I'm not in this trade. I'm going to wait for a better support level. Maybe we get it, maybe we don't. But I think the Aussie dollar and New Zealand dollar are a bit better placed right now as far as the dollar index goes. I just want to see when those big levels hit. Okay, do I see the NQ pulling back to the 200? I think it already hit the 200, right? I mean, if I go to my charts here, one thing I am watching, and you should be aware of this, we still have a decent bar count. We still have a decent bar count running on the daily time frame on the SPY. So we have not hit the 200 in over 200 some bars. So that is 250 bars. Now that's not crazy overextended. You take a look at gold. Gold is down pretty heavy on the day, which is why I'm not buying these highs. I want to see if we have some dips and pullbacks. Gold has also been stretched out for over 200 and some days. Here we are at 272 bars on gold. Here's one trade that's a little wild and crazy. NVIDIA. Okay, NVIDIA turned nicely off those all-time highs. NVIDIA is at 400 plus bars on the 200 EMA. And this is why I was interested in calling. I'm trying to think. I had a trade in here that I lost on. I had a trade in here that I won on. I had a trade in here that was profit. I didn't call. I should have. I don't know. I should have done a bear put spread there. I didn't. Whatever. But I'm looking at this bar count as we stretched far enough away that I think price on NVIDIA is going to be reverting, something like that. So, I mean, if we get the opportunity to buy NVIDIA in the low 100s, I'll buy it. Whether I buy the shares, which after the split, totally affordable, or I just put on more options and look at if I can just trade the direction. So let's go to the ES market. So ES is S&P futures. Do we pull back into my moving averages? Okay, look at my ES feed. This is starting to roll over. There's my 21, there's my 50, there's my 100. Look, if we roll over, look at this trend line break. If we roll over here and things get a little testier, this move to the downside, there's a 100, there's a 144, there's a 200. Also, there's a long bar count. So, I mean, we had a pullback in here. We had a pullback in here. We had a pullback in here. If we're having a pullback, I mean, I'm looking for this to offer up some dynamic support. That's all it is. And then NQ, same thing. We already tested NQ during that August 5th drop. So we hit the 200 EMA, but we didn't hit it. I know, I'll take that. I was like, we did hit it on the Qs, not the SPY. So could NQ fall? Yeah, of course. You know, we could fall into this area, fall into here, but I'd be looking for dynamic support like all day. Now, I'd say dynamic support with defined risk, because if it goes lower, well, obviously I'm not interested in being on the hook for owning shares. But if we have the highs here and we have the August 5th low, I mean, if we have a pullback, I'd like to take a stab at, you know, buying this thing cheaper and then trading it back up to highs again and not taking out the August 5th low. I mean, are we in a worse situation than August 5th? I don't think so. I mean, August 5th was like the Japanese yen's going to break the entire market. Well, it didn't, and it hasn't, and I don't see that being like phase 2 of this. What I see instead is, well, I mean, we got inflation going higher, we got yields going higher, we got the Fed cutting rates at all-time highs. You know, if earnings isn't justifying it, rates are coming down, but yields are going higher. The bond market is expressing higher volatility and higher inflation. I mean, the market can be volatile. We know that. But the first thing I said this morning was, we've been waiting for a pullback. We're getting it. It's okay. All I'm trying to do is have cash at the ready to deploy when I think it's a decent opportunity. So right now, the thing that's working for me is hedges. So anything I've been trading at all-time highs that is, you know, profiting from any type of downward movement, I've got hedges on ES, I've got hedges on MES, I have hedges on NQ, and I have hedges on MNQ. Okay. And I also, on one of my income strategies, I have a hedge running on the SPY as well. And it's a way out of the money put. But if somehow we have like some catastrophic thing of a 5 or 10% drop, that might pay me like 1,000 to 2,000%. So anyway, that's what's working right now. I want to see where these levels go. I think we have enough drama in the markets that it's like, we'll deal with whatever earnings comes out tonight with Apple and Amazon. We'll deal with whatever non-farm gives us tomorrow. Next week is election week, and I think there's going to be more uncertainty around it, because if we don't have a deciding election by Tuesday night, who knows? Things get a little bit more uncertain. Okay. All right. Let's see here. YM's asking about EdgeFinder. Go right to the top setups. That's the easiest way to use EdgeFinder. If you're looking for trades, top setups are great. There's a video that I did for the team with the EdgeFinder of how I use it day to day. One more thing, Nick, Chandler, and James, I can talk to you guys offline, but I do have a full options course that I wanted to give to anybody that has a VIP membership. So if you're doing the VIP bundle with A1 Trading and EdgeFinder, and you buy my pulver alerts for the one-time full price, I have a full strategy course that has 13 strategies. It's a 72-page PDF and 11 videos. So I want it to be that's a included bonus for anybody that signs up for the A1 trading bundle, like get the VIP gold membership, get the pulver alerts, and that's a full course. I'm going to sell that course by itself for $497. But if you're a VIP member, all that stuff, then I want to give that to you as a big thank you, just so you know. Cool. All right. Graham says election is going to cause volatility if election ends up like Gore Bush court case. We don't know. Yeah, I don't know. And I hope, I mean, for election integrity, I hope that's not the case. I mean, that would feel like 2020 all over again. I hope that's not the case. I mean, right now, if you look at like your Kolshi, your Polymarket, your betting platforms, it shows that Donald Trump's going to be president. So it's not even close. It's like 63 to 36% or something like that. So I don't know. But the 538s and the other polls are showing a little bit tighter. I don't even know. I honestly have followed very little of it, but when we're seeing these huge bets, I mean, do they know something we don't, or is that just people being more vocal and saying like, I think he's going to win, I'm going to bet on it? It has nothing to do with actual voting. I mean, I think if you care about it, then go vote. But right now it looks like the voting machine, or I should say the betting engine is showing that Trump is our winner. But you never know, because that could be the betting side and not the actual poll side. They could be two very different things. So anyway, that's that. So the question on the Qs, could it pull back? I mean, yeah, it could pull back. I would say that this is finally starting to show some signs of taking out recent levels. So if we take out this low, then we're just falling back into some dynamic support. Like I said, I would love a 100, 144, or a 200. I mean, if we get a nice little dip, let's say a nice little scoop at these lows, I mean, I'd certainly take a stab there and see if the market could just try to find these highs again. Maybe, just maybe, this high and this low, think about this. Is it possible that we have a range in the S&P? Is it possible that we have a range on the NASDAQ where we had this blistering 20+% pace? Right? And the market's up 20+%, gold's up 30+%, Bitcoin's up 100+%. Is it possible that the market just decides to go sideways? Oh my gosh, what a boring market that would be. Not for a trader, right? If we have support to trade, that is a brilliant market to make some money. But it means that we can't have this just stretched out. We're going to all-time highs again, booms and busts, And the reality is too, it's like I say that because we could also cap our losses, where it's like if the market doesn't have enough terrible stuff to justify tanking and crashing, then it just stays in a range that we have to figure out how to trade. So I still think there's plenty of support in here to buy until proven otherwise. But if we don't take out this August 5th low and we don't take out this all-time high, I'm ready to just scoop up some trades as low as possible. Not trade super long term here, but maybe out probably 45 to 60 days, maybe 90 days, and just look at some profit. It's pretty simple. Okay. But that's a big range, but it's only 10%, man. It's not that large, to be honest. It's only about a 10% range. This Q is a 15% range. From high to low on the NASDAQ, that's a 17% range. The Q's around 15% because we didn't have the futures feed, but this is around 15% top to bottom. So that is a big range, but percentage-wise, it's 15 to 16%. That's not gargantuan. That's manageable. I mean, 2015 and 16, we had a 20% pullback. 2018, we had a 20+% pullback. 2020, we had a 30 to 40% pullback. 2022, we had a 25 to 35% pullback. So a range of 10 to 15% is not a deal breaker. It's just a range, So, all right. I'll give you a sneak peek here. I'm almost at the top of the hour. I'm not sure if Nick Phillips is coming on after me. Maybe yes, maybe no. But I'll give you a sneak peek here. So let's see here. Nick, if you're in the office, I'll hit you up on Discord after this. Chandler, same thing. I just want to get some feedback from you guys. Here is a look at my practical options. So these are all the videos that I produced for the course. This is the entire strategy guide. So strategies, all the risk graphs, explanations, broker platforms, 13 core strategies that I would be trading all the time in my pulver alerts here. But what's nice is if you get the language of the strategies, what's an at the money, in the money, out of the money, What's a credit spread, debit spread? What's bullish? What's bearish? You know, what trades am I looking at for bullish or bearish or neutral? All these are walked out or walked through thoroughly in the course. So this is just a video series. You know, trying to make options a little less scary because it's so intimidating to have these stupid names of strategies. In fact, somebody today told me, Chris, what about the Batman strategy? And I'm like, what about the Batman strategy? No, I've never heard of it, but I looked at it and it's like 2 ratio spreads. Okay, so I put one on as an example, and it looks like a Batman. So I'm like, I get it. It's a clever name, but it's a very undefined risk strategy. So you have this potential profit, you have this credit potential profit, and then you have risk. But the risk is undefined on the asset. So if price is here, you have credit. So you can make money if price stays pretty much sideways. Price stays sideways, you make money. You get a profit trap, great. But it's undefined risk if price goes way higher or way lower. And it's just like every other range strategy. There is a point that you're going to have to take a loss. So it's not perfect. It looks kind of cool, but it's a fairly expensive trade. So I don't love it. I do like ratio spreads, but I like to do them on the put side, not the call side. So anyway, stuff like that, if that's like, I have no idea what you're talking about, that's why I have the practical options course, because stuff like that will start to make sense. Okay. All right. Any other charts? Any other requests? We went through some currencies. We went through gold. Let me take a look at gold and silver. So gold, pretty nasty pullback at 1.88%. Silver's down 3.5%. Son of a gun. All right. Let me check on silver on one trade. Silver, you better not freaking. Let me check on SI for a second. SI. Let me check and see if I have pending orders here. 1, 2, 3, 4, 5, 6, 7. I don't see anything. Did I get filled on that order? Let me check my history real quick. So chart history. I don't think I got filled on it, but I'm going to find out here real quick. So SI. And for the last, let's go 60 days. Okay, so it expired. Fine. So that trade is not in. I had a bull put spread on SI that I'm going to go ahead and just wait on. What I'd like to see on SI would be this. If we go a little bit lower, look at all this nice dynamic support. I'm looking to see if I can do the same thing where I can scoop up something down here, and maybe do a bull call spread at the backside of this trend line and then go long on silver again. Okay. All right, DAX. Yeah, we can take a look at the German DAX. We're probably off the highs a little bit. Europe was down, Asia was down. You know, markets were all down across the board. Oh yeah, that's a nasty day for 3 days in a row. That's just straight down in the DAX. But again, look at where we are. 2150. I mean, here's what I would look at next. If we have the 50 hitting the 100, possibly the 144, I like the DAX for some support. So between any of these levels here, if you're going out long enough, I'd say 3 months, 6 months, if we have any type of support and turn, you know, all-time highs are achievable. We just want to see if the market can find support. That's it, you know. So I don't mind it, but I would say I'd want to see this settle back into, you know, maybe the 100 or 144. And I say that because if we come into the 200, a lot of times it's close below the 200, then close above it, and you're already missing out. So if I get a trade that starts around the 144, I'm oftentimes able to scoop up some of those bottoms and get a you know, pretty accurate price there. So just food for thought on the DAX. But I would look to see if this does want to fall a little bit deeper. You know, try to find some nice dynamic support around those deeper EMAs. Let's see here. Yeah, stocks are down in China, so that's HSI. I had the FTSE was another one I want to take a look at here. So the FTSE, finally, it's breaking the lows. My strangle is no longer. I mean, I didn't trade this, but I was looking at how beautiful this chop was, and I'm like, man, if you could just, you know, sell a strangle here above and below, this would be just a killer strategy. But we're finally breaking. So look at the outer trend line. You know, this has some pretty good support structure. Look at this potential low here back in August. So yeah, I mean, I would say there's no major damage done as long as we stay above that August low. So if we come down for 1, 2, 3 days and we start to turn off that trend line, there could be a chance to buy with a tight stop loss or define risk and then see if this wants to get back into this chop again. That's it. You know, I think that's a justifiable trade right now. Neil asking about option score. So 2 ways. If you are a member of the Pulver Alerts with a VIP bundle for A1 trading, then I'm going to include that with the purchase, or I'll have an on-demand page that I will share. It's going to be in my Discord, so it'll be like a on-demand video series that I'll post on my Vimeo page. So I have it a la carte. You can rent the modules for $50. Like if you want to just focus on, I just want to learn how to trade bullish spreads. Well, you can just buy that module for $50. If you want to take the whole course, it's $497. Okay, but I have a page on that on my Discord. But if you get the full bundle from A1 Trading and the EdgeFinder and my Pulver Alerts, then all that stuff, I want to throw that in for a big old bonus. Okay, so that's DAX. What other charts? Yeah, we did the DAX. We did FTSE. Let's take a look at China for a moment here. HSI is not really doing any major structural damage to the downside. I do wonder if after the U.S. election, China has another round of vocal stimulus, kind of lifting animal spirits by the end of the year. I kind of hope that's the case. Alibaba's hanging in there pretty resilient. Baidu, fairly resilient. FXI, same thing. JD, same thing. On this note, let me see what OXY is doing. 50.07. I might end up doing a quick roll on this one. Take a quick peek before I go. Not sure if I need to be pulled off here at the top or I can go for a few more minutes. I'll go for another maybe 10 to 15 minutes. Okay. So let me check on OXY. I'm going to see if I can roll this beautiful bean footage. So the trade that I have on right now, right here. So I have the shares at 500. It's covered out to next Friday at 53. If this is trading for a low debit, fudge, man. I still get another 25 cents a premium if I wait a little bit longer. Let me see here if I roll. So I just want to look at it right now. If I roll it out, I've got to roll it out by a week, which is not great, but I want to roll it out and down. Let me see what my break even is. Now on the put side, I do have a put. If oil were to crash and OXY were to crash, I do have a long put that's very cheap, but could pay something to help offset some of the loss. Anyway, let me see if I just do a quick roll if it pays me anything. So if I look at a roll, if I keep the same strike, I roll it out a week, I get 34 cents on that trade. If I roll it down 50 cents, I'm actually losing on that. So I roll it down 50. Let me see what my break even is. That's the most important thing. Where did there it is. Okay, so let me go to my tracker. Let's go to OXY. So right now I have a break even of 51.99. 51.99. So if I were to roll it out another week, let me do the math here. So my break even is 51.99. If I collect 45 cents on the roll and then get it called away at 52.50, I make 96 cents on 500 shares. I make $480. If I keep it at 53, I get 34 cents. So I'd go 51.99 minus 34 cents. Get it called away at 53. That's $1.35. I make $6.75. So let's see here. I think, oh man, if I roll it down further, this one would be just get me the heck out of this trade. So 51.99 minus 62 cents. Get it called away at 52. I make 63 cents. I make $3.15. That's probably the safer play, to be honest. So I think I'm going to do that. I'm just going to lower the cost basis and push my strikes down. So I will move this one strike lower out another week, lower my cost basis by 63 cents, still make some net profit on it if it gets called away. I can obviously roll it again if price jumps up, but if it doesn't, I want to keep working my cost basis lower and lower. So in the event that I need to repair it a little bit more aggressively, I can. Okay, so I think I'm going to do that on OXY, and then let me check JD for a moment here. JD is in a similar spot where I go to, JD is here. I have the shares. I've got them covered out to this Friday. This one's probably trading for less. If it's less than 10 cent debit, I might roll it. Yep. So if I close that right now, hang on a second. If I just close this covered call, trading for 6 or 7 cents, to me, to wait for tomorrow to get 7 cents is not worth it. So let me look at my JD here. JD. 40.82 is my break even. So if I do a roll on this one, if I roll, so if I keep the same strike, I go out a week, I get 84 cents of credit. That's pretty darn good. That lowers my cost basis to 40 bucks. Let me do the math there. So I think I have 500 shares or 1,000 shares. 500 shares. Okay. So if I get the strike at 42, I go from 40.82 break even, take away another 84 cents, get it called away at $42 on 500 shares. I still make 1,000 bucks on this one. I'm going to do it. Okay. So I'm going to roll this one for hopefully 84 cents. Keep the strike at 40. Let me see if I go 41.50. So this is interesting. I can lower my strike by 50 cents and get $1, which I think makes it a pretty neutral trade. Let me see if this will work. So 41.82 or 40.82 minus $1, get it called away at 41.50 times 500. Okay, so I make a little bit less profit if I lower the strike. But I also bring the cost basis down a little bit deeper. If I wanted to just straight up repair this one's probably a little bit less exciting. Yeah, it's a lot less exciting. All right, never mind. So I think I get 84 cents there, $1. Let's see here. Is it possible? 42 looks okay. 42, let's go to JD. 42 is in this little cluster. I'm good with that. I'm going to roll it. So 42, I'd like to make 1,000 bucks. I'm going to try. Okay. So I'm going to roll this out. So I go out a week. I close out the 42 call. That's this Friday. I roll it out 1 week. I keep the same strike. I get 85 cents. Hopefully it fills. 82 is the bid. So that's the least amount. This will help me make about 1,000 bucks if I'm right. So let me roll this bad boy. So that account's good. Let's see if I can roll it for 85 is not filling. Let's go 84. 82 is the bid. Give me a little bit over the bid, would you? Come on, man. 82. You're going to fill me at the bid, you freaking robbers. All right, fill the 82 cents. So next up, same thing. JD, this one just has puts. That one's fine. This one has the shares. So call, quick roll. Pretty simple, 85 cents. See if I can take this one on this account. 85 not filling, work it down to 83 cents. 82 is the bid. Not filling, just taking the bid. Son of a biscuit. All right. 82 cents, no problem. Next up here, that is just some shares. This one owns some shares. There's my covered call. Do a quick roll. And let's go. Hopefully 82 cents will fill. You son of a gun. So 81 cents on this one. What? Come on, jabroni. 82 bid. Let's go. It got canceled. You got to be kidding me. Working. All right, I'll let that one marinate for a second. That's surprising it's not filling. Let's check the positions here. Just some small shares and just some small shares. Okay, so all the trades that have it for income, I rolled this one out to next week. This one just has naked puts. This one I have shares. I rolled that to next week. This one I'm trying to roll the next week. Not filling at 82. I mean, I guess I'll take 80 cents, you freaking slime balls. Fill to 80 cents. All right, so that's going to change my break even a little bit. Let me have a look here. So I've just got to update. So I did a roll on OXY, or I'm sorry, JD. Let me update this. So this is rolled to 11/8 expiration, $42 covered call for 80 to 82 cents, which gives me a new break even of 40. $40 to 40.02, which would give me exactly $1.98 to $2 per share of profit. So if I get it called away for $1.98 a share, 1.98 times 500, I make $990. If I get it called away for $2, I make $1,000, and that is out to next Friday. I'm gonna do the same thing on OXY, but there's still a little bit of premium on OXY that I'm gonna let marinate. I might do that one on Monday next week, which would just be a new covered call. So anyway, that's that. Gold, Gerald, same thing on gold that I've said. I'm just waiting for a pullback, man. It's pretty simple. Gold is pulling back today nicely. Great. I want it to pull back more. How much more? How about a 21? How about a 50? Right? Find me some dynamic support. I mean, this has been a very healthy trend for a long time. We're finding just barely support in here. So if we pull back to this level, interested in putting on some more positions. I will trade GC and GLD to add some exposure to gold. Okay, same thing on silver. I'll trade SI and SLV if I get the pullbacks that I like. Gold is pulling back. I'm happy with that. I want to see some more. I want to see some deeper pullbacks. Okay, everybody, I'll let you go for today. Real quick, like I said, if you add on a VIP package for the, kind of the full suite where you get the A1 trading EdgeFinder. I know they're doing a bundle with like the stock box. You get my pulver alerts, all that stuff. If you do a full pay there, I will give my practical options course to you as a thank you. If you just want to buy the practical options course, that is an a la carte thing that I'll have in my Discord. But obviously, the best bang for your buck is going to be do the bundle. Cool. All right, sounds good. All right, buddy. Thanks for being with us today, and we'll be back tomorrow. Non-farm payroll is tomorrow morning. We've got earnings today on Amazon and Apple, so that'll be a big one to watch. We'll see what the market does. What? See ya. Bye.
Thank you for watching today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. We're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. You can fill out an application with the link in the description below. That's all for today. Trade safe, and we'll see you tomorrow.